Hi everyone.
Hi everyone. My name is Scott. My name is Scott.
Hi, it's David Gower here, the CEO of AEM Resources, just to provide you with a brief update on our activities, our product, our projects, some of the milestones we hope to hit in the coming months. So we've been talking for some time about completing this delineation drill program at Minera and Infanta on the IBW project, and getting the 43101, the first 43101 completed on that. So that work is finally started. The database has been transferred to the QP in the UK that's going to do that work, and you expect to see the first modeling from that in about 30 days. There will obviously be a couple of iterations to finalize that, but we do see hopefully hitting our target for some time next month. The interesting quandary that we find ourselves in is that our drill results have really been strong lately, such that our two deepest holes, holes 87 and 107, are some of the better holes that we've drilled. So we've got very good thicknesses of very high grades in those holes. Hole 107, we intersected 32 meters of very good grade mineralization, and that includes 12 meters that was running 15% to 16% lead zinc, plus 3 grams gold and 200 grams silver. The entire 32 meter inlet should make cut very comfortably. 100 meters to the west of that was hole 87, where again we hit 28.3 meters. That is good grade, has a decent gold and silver credit to go with the strong base metals, and within that 28 meters, then there's a very much higher grade zone as well. But we expect the full 28 meters also to make the cutoff. Now, these step downs are the deepest holes that we've drilled to date on the main plunge of the deposit, and clearly demonstrate that the deposit is remaining. It would be unusual in my experience, but you would see some of your best holes at the edge of the deposit. So we do feel comfortable that we'll be stepping down below that, and in the meantime, we are filling in above it so that we can pull these holes up into the resource. So we worked with our QP that will allow us, as those assays come in towards the end of his project, he will be able to build the model and then backfill the assays when they come in. So should be minimal delay, if any, over that. And in the meantime, we will look at what the project looks like in terms of going deeper. We still have 15 drills operating. We do expect that we'll scale that back a little bit as we complete the infill portion of the program, but certainly our intention to keep drilling at a significantly high level to continue to expand this deposit. So that's a very good outcome for our company. We're very happy with the results to date, and we're going to continue to make this deposit bigger. So I just want to make it very, very clear that our initial maiden 4301 resource is an interim resource. It's going to be redone at be larger in the future. In terms of other projects that we're working on, of course, we still have Infanta deposit. It also will be included in this resource update. So that will be a nice little addition. And then the other big project, I guess, that we've been working on is the Nuevo Tintillo project, which is about 90 to 120 kilometers. It's a very large property. It's more than 23 kilometers east-west. So, and that's located east, much closer to Sevilla, adjacent to the Rio Tinto mine, adjacent to the Asnacoir. We completed the airborne work there last year. We've been mapping through the fall and into now, and now we've just completed detailed gravity surveys. So I'm pretty excited to see the interpretation coming from that gravity. In this part of the world, a combination of EM with a strong gravity anomaly is a very good recipe for detection of massive sulfides. The area where we focus the gravity is an area with massive sulfide past production, some very high grades, even though small. Nazareth, according to our archives, produced 6% copper. So again, that'll be later in the year, probably third quarter at the earliest. We do expect to see a couple of holes in there. And even then, back onto the IBW project, I guess I should have mentioned, there is the third deposit of Kura, which we have not drilled yet. So we do expect to send to put some drill holes into that this year as well. All in all, it's been a great run drilling off the Romanera. We're very happy with the experience that we're having with the regulators. They've been very helpful, and we continue to move the project forward.
Hello, my name is Tom Paragudoff. I am President and CEO of Apollo Silver Corp. Apollo is a TSX-listed company focused on advancing our Calico Silver project, which is located in the historic Calico Silver Mining District in San Bernardino County, California. I want to talk to you today about what makes Apollo Silver a compelling investment opportunity for those investors looking for exposure to silver. First, I'll talk about leverage to silver that we provide. Second, I'll talk about the mining-friendly jurisdiction that we are operating in. And third, I'll talk to you about the experienced team that is supporting me as we advance Calico forward. I want to first talk about leverage to silver. Calico is one of the largest undeveloped silver resources in the U.S. Our resource announcement that we updated on March 6, 2023 includes 110 million ounces of silver in the measured and indicated category and an additional 50 million ounces in the inferred category. We're operating in San Bernardino County, California. San Bernardino is a very mining-friendly and stable jurisdiction. In the last 15 years, there's been over $60 billion in mineral reserves permitted in the county. The county supplies the vast majority of construction materials, including aggregate and limestone, for the Southern California construction industry. But it's not just construction materials. In addition to that, Equinox operates the Castle Mountain gold mine. MP Materials operates the rare earth operation at Mountain Pass. The county recognizes that the responsible resource development is essential to the continued economic development of California. In addition to being in the right county, we've got the right type of mineral title. Our resources are contained either on private lands or on patented mining claims. Both of these come with vested mining rights. We're very well situated as far as infrastructure is concerned, with access to the property via paved roads. We're about 15 kilometers from Barstow. We've also got electricity within about 5 kilometers of the property. Importantly, there's no national parks or monuments that encroach on the property. You can have a good project, you can be in the right jurisdiction, but you need the right team. And I'm fortunate to be working with a tremendous group of very experienced people. At the board level, we have Andy Bowering. Andy chairs the board and has been involved in a number of very successful transactions and stories over the years, including American Lithium, Prime Mining, and M2 Cobalt. We have a very experienced board with very senior directors that provide sound governance and are committed to independence. I think you'll see when you dive deeper that Apollo really is a compelling investment opportunity, and I look forward to speaking to you more. Thank you very much.
Hi, my name is Scott Hicks. I'm the CEO of Strategic Resources, and I'd love to tell you a little bit about the transaction we're completing right now. So currently we have the Mustavara mine, which is a past producing vanadium and iron mine in central Finland. We acquired that in 2020. And right now we're in the middle of acquiring the Blackrock project. This is a fully permitted mine and metallurgical facility in Quebec. Right now, we're issuing 280 million shares to Orion Mine Finance and Investissement Quebec to buy the asset. When all is said and done, we'll have about $175 million market cap. We'll have $14 million in cash that's mostly been provided by Investissement Quebec and the Quebec government, Orion Mine Finance, and Ross Beatty, who's a large shareholder of Strategic Resources currently. The three of them made up most of that $14 million financing. Over the next year, we're going to work to put a construction funding package together to build the Blackrock project in Quebec, both the mine and the metallurgical facility. We're extremely excited about this project as it relates to the decarbonization of the steel industry. We'll be producing a high purity pig iron that will go into the electric arc furnace transition. So as all these steel companies transition from blast furnaces to electric arc furnaces, they will require this high purity pig iron that we will be producing at the Blackrock project. Our product spec is going to be one of the best in the industry. It's going to be very comparable to Rio Tinto's Sorel product that's currently produced in Quebec. Outside of the high purity pig iron, we'll also be producing ferrovanadium through toll processing. So we'll produce a vanadium slag at our facility and then send that elsewhere. So that could either be turned into ferrovanadium or turned into vanadium electrolyte. And the reason that's exciting is we believe that the growth in the vanadium redox battery segment is going to be substantial over the next decade. We're already seeing large-scale vanadium batteries deployed in Asia for grid-scale storage, and smaller units deployed through the Western sphere on, call it 1 to 5 megawatt installations that are being attached to wind and solar units right now, or being used for backup power. So, we think that in the industry, you're going to see GDP growth on the vanadium side, on the steel usage, which is what it's most commonly used for, and then potentially fairly explosive growth for vanadium on the battery side. So that's why we're in the game. We are very happy to have a fully permitted project in Quebec with 2 large shareholders. So when the deal's done, the Quebec government's going to own 41% of the company. Orion Mine Finance is going to own 41% of the company. They're both extremely committed to putting up the capital to see this project get built. So we're at kind of the goal line here, and we just need to start construction. The current plan is to start construction in 2024, and we're excited to get that going. So if you have any questions about Strategic Resources, you can find us at strategic-res.com. We're on Twitter, we're on LinkedIn. You can obviously reach out to me as well. So that's the summary. Thanks very much. Appreciate your time.
Sam Spring here, President CEO of Kincora Copper, ticker KCC. Kincora is the leading porphyry explorer in Australia's foremost porphyry belt in central west New South Wales. I wanted to highlight today 3 fundamental reasons to consider investing in Kincora, which are fundamental for any advanced exploration player such as ourselves. They come down to team, location and targets. Team, we've got an industry-leading technical team that's got a track record of major discoveries, both domestically in our immediate district but internationally. It's not often that you have a calibre of finding such scale tier 1 copper porphyries within a junior. And this team has skin in the game. They are shareholders, they're remunerated significantly in shares, and with the board have a well-rounded skill set to take this project, these portfolio projects, from exploration through to studies and ultimately production. Location. We have a district scale and strategically located portfolio of 8 projects in the Lachlan Fold Belt. This region has been the focus of significant investment and recent successes recently, and there's significant existing infrastructure, government funding support within this region. So from an exploration through to development perspective, it's extremely well located. It's also worth noting a new entry of a major mining group with a peer group explorer similar to ourselves. Anglo Gold Ashanti recently announced a heads of agreement with up to $135 million worth of investment within Inflection Resources. The reason for highlighting that is it's a direct peer group and comp valuation-wise for just 3 of our earlier stage projects within our portfolio of a total of 8. So coming to the targets, they're the third fundamental reason to consider Kincora. After multiple years of working in our district, we've de-risked 13 large-scale gold-rich copper discovery opportunities that we're now in the process of starting to drill test. These all have large-scale upside and are de-risked to the point of drilling. This week in March 2023, we've just announced our first exploration results at our flagship brownfield Trundle project. Trundle is the only brownfield project held by a listed junior in the district. We've got off to an excellent start with gold-rich potential ore grade result in the first 3 prospects that we've announced. There's a total of 5 prospects looking to be drilled at Trundle as part of this program. As again, noting 13 targets across a portfolio of 5 projects to be drill tested in this next phase of drilling. The company offers significant exploration leverage to success, having undertaken a December capital raising to fund this program. I'd also like to highlight that in our most recent exploration results, we note that there are 2 neighbouring explorers that have started drilling adjacent targets to our flagship Trundle project, both to the west and to the south, Rimfire and Fortescue respectively. So further information is available up on our website, www.kincoracopper.com, and I thank you for the opportunity of presenting this to you. Please do reach out directly if you have any questions. Thank you very much.
Good afternoon. My name is Peter Ball. I'm the Chief Executive Officer of Silverhammer Mining Corp. Over the next 5 minutes, I'm going to run through a little bit about the company, the jurisdictions, our team, our mandate, and a little bit about the silver market going forward and some of our goals for 2023. We trade on the CSE under the symbol HAMR and the OTCQB under the symbol HAMRF. So first of all, if you're looking at a company in the precious metal space, we are a pure silver play. Again, the fundamentals of silver, from what the market is telling us, is going to significantly change over the next decade with the supply-demand crunch that's going to happen up until 2030. If you noticed recently in 2022, silver production peaked at about 850 to 900 million ounces this past year, where the demand has increased to about 1.2 billion ounces in 2022-23. This is a deficit of 250 some million ounces. We see this continuing. We see the rollout of solar PV cells, the continued electrification and silver use in electronics and cars doubling over the next few years. So we are a pure silver play. Secondly, we are focused in what we believe 2 of the best jurisdictions to look for silver or make a discovery in advanced projects. One being Idaho, which is ranked number 7 in the world by the Fraser Institute, and Nevada, which is ranked number 3 and has consistently ranked in the top 10 over the last decade or more. Again, if we're up in Idaho, which our flagship project Silver Strand is located, it's located in the Silver Valley, one of the best places to hunt for silver, one of the best, most productive zones in the world for silver. So again, I'll talk about Silver Strand very quickly in a few minutes. And also we have 2 projects, Eliza and the Silverton project in Nevada, in what we call the Silver Alley, which is in Nevada, was built on silver over 100 years ago. All 3 of our assets are past producing mines, or what we call brownfield assets. There was a lot of production near and around the assets we now control 100%. So I'll talk about those in a minute, but another key thing that I think investors should take a look at Silverhammer is our technical team. There is three gentlemen, specifically Lawrence Rolston, who's been in the industry for over 40 years. And I think if you Google his name or haven't heard of him, it's a name to get to know. He was an analyst, a newsletter writer, and has put together and managed and assisted and financed multiple companies over his 40 years. Have a look at his bio on our website. Secondly, we have Ron Burke. Ron Burke was the ex-vice president of exploration for Centerra and also for Silver Standard, two majors that were very successful, and Ron has had a stellar career over his 35 plus years. And more recently, Don Byrak just recently joined. Don was the ex-senior vice president of Coeur Mining in Idaho, so we're very pleased that recently he just joined our company about a week ago, and shortly after PDAC. Great to have him on board, and he was actually VP of AngloGold Ashanti, which actually put together a lot of the assets in Nevada and across North America, and he was also VP of Hudson Bay Mining and Smelting, where actually I used to work with him side by side about 30 years ago. A little bit about myself. I've been in the mining industry myself for about 30 years. Originally started off in the engineering side, got into being a broker at RBC, and then became a financial analyst over at Bell Canada when the mining market was a little bit wonky about 25 years ago, and recently been running or managing companies in focus on the North-South America corridor from Mexico to South America and back again here in Nevada and Idaho. Again, it's a busy year for our company. We've got 3 projects that are brownfield. They're mostly ready for the drill bit. We're actually in the permitting, or what we call the plan of operations for each of the projects to ensure that once we get on the drill bit, we don't stop. And we've got a lot of interest on the capital markets for assisting us going forward. We're looking for accretive or acquisitions to add to the table to develop a pipeline of assets that would be assist us moving forward. So again, in Idaho, we're looking to drill and advance the Silver Strand project. In Nevada, we are looking to drill what I find a really interesting asset, which is the Eliza project, which had significant high-grade results last year that was sampled. And it actually had up to 5, 6, 7% copper and lead and zinc associated with the assets. So we're going to test that one. And Silverton's actually already permitted, has 12 pads, 13 pads ready to go. So busy year ahead for us. Again, give us a call. We only have 46 million shares out. It should be a wonderful year. At the end of the presentation on the website, I am available to anybody. If you want to learn a little bit more about Silverhammer, give me a call, answer anybody's call, send me an email. I will get back to you guaranteed. And thanks for taking the time today to listen about Silverhammer. It should be a great year. Again, HAMRF on OTCQB. Again, Peter Ball, CEO of Silverhammer Mining Corp.
Hello, my name is Sandy Chim, President and CEO of Century Global Commodities. We're a TSX company trading with a symbol called CNT. We're an iron ore development company. We've been around for about 15 years, same management, same very consistent board. We have a very exciting project, very strong balance sheet. And also in addition to being a mining iron ore development company, we actually have a counter-cyclical non-metals business to support us with some cash flow to help us with smoothing out of some of the cyclicality of our business. Let me give you a quick rundown of the top KPIs of the company. As you can see, actually, we've got I mentioned strong balance sheet of close to $10 million of working capital, and about $6 million of that is actually free cash. We've got a project called Joyce Lake, very exciting, very robust project. Just finished the feasibility study under 43-101 standard December last year with $185 million of net present value after tax at 8% discount rate, delivering a 22 after-tax IRR on the project. On Joyce Lake, we have already taken it over the last 10 years through environmental permitting, although some of that is in hiatus because of the bottom of the market, but we've been working on that for almost a decade. And we're at advanced stage of environmental assessment file the federal conforming EIS is under technical review by the federal agency. On top of George Lake, we have other iron ore projects all developed by ourselves over the last 15 years, and we got a total NPVs of 2 of those projects at about $5.1 billion of net present value after tax. I mentioned about this non-metals business that we have in Asia, food distribution business. We started at the bottom of the market to generate cash flow, and it's generating, I think, about $8 million for the last 9 months of the year of revenue, $8 million roughly, at 30% net profit margin, delivering a net cash flow and net profit of $650,000 to help us defray some of the overhead cost and project development cost. Now, let me get into our very exciting George Lake project, which has a feasibility study completed by a reputable Montreal engineering firm, BBA, December of 2022, 43101 feasibility study standard, delivering a net present value of $185 million after tax, 20% IRR, 3.5 years of payback period on an initial capex of $270, roughly about $12 US per ton of capex. And the FOB cost is 61 or 47 US dollars FOB, compared to a market trading about 120 to $130 throughout the first quarter of 2023 and over the last 4 years. The project contemplates on 24 million tons of iron ore resources at 60% shippable international standard grade, 17 million tons of reserve at about the same grade, 2.5 million tons a year of annual production for about 7 years, with extension possible for targets that we've worked on, exploration potential further to extend the mine life of the project. And over and above that, we also have other major multi-billion tons of project to work on. On a landed basis, we're talking about Asia landed, China landed, the landing cost of about 73 US dollars. Again, when the market is trading 120 to $130 per ton, in an area where the major miners and steel makers are, they've been operating for the last 70 years, and therefore the rail imports are all available. And because our project actually is a high-grade quarry type of operation, so we don't need a lot of construction time. The operation is very simple, only crushing and screening, a bit of drying in the summer. So no tailings generated, making the environmental footprint a lot smaller and more friendly. And I'd like to also highlight towards the end of this presentation, our very strong board. A lot of them have been around for the last 10, 15 years. Some joined us, adding a lot of skill set and credibility to the board. As you can see on the slide here, that we got Mr. Dwight Ball, who joined us last year, who was the Premier of Newfoundland and Labrador. And on the technical side, Peter Jones, Chair of Advisory Board. He was the founding CEO of Hudbay Minerals. Since his retirement from Hudbay, he's been helping us taking our project from discovery all the way to feasibility study and environmental as we speak. Hope you find this presentation interesting. If you have any questions, please do feel free to give me a call, send me an email. I look forward to talking to you again. Thank you.
Welcome to KNX Metals. My name is Shane Ebert. I am president and CEO of the company. I'm a professional geologist with 30 years experience in mineral exploration. KNX Metals is a gold-focused exploration company. Our key asset is the Gold Range project located in the great mining jurisdiction of northern Arizona. At Gold Range, we are exploring for near-surface, bulk tonnage, oxide gold deposits, and we have assembled a 4-kilometer by 5-kilometer land position in a highly prospective underexplored gold belt. This area has seen some high-grade gold mining dating back to the 1880s, some small-scale open-pit mining in the 1980s, but prior to KNX, this part of the belt has never been put together and systematically explored by modern methods. For very low cost, KNX has taken an exploration concept, assembled a key land position, defined the major mineralizing trends, and key geologic controls on mineralization, and has made some key gold discoveries by drilling. The main mineralized trend at Gold Range is our Excelsior to Eldorado trend, which has been defined for 3.2 kilometers along strike and is up to 500 meters wide. This trend likely continues further northeast under basin cover and continues for several kilometers to the southwest, where it hosts known gold deposits on an adjacent property. We have drilled over 114 holes on the property, but we're still at the discovery and definition phase. Our known zones remain open in most directions, and multiple new large targets have not yet been drill tested. Our most advanced gold zone to date is the Excelsior deposit. We've drilled 52 holes into Excelsior, and we have defined a continuous zone of gold mineralization extending at least 350 meters along strike, widths of 30 to 100 meters, and to depths of 50 to 100 meters. The zone remains open along strike and to depth. Drill intercepts from this zone include 1 gram per ton gold over 59.5 meters starting at surface, 1.6 grams per ton gold over 35.1 meters starting at surface, 2.2 grams per ton gold over 24.4 meters starting at 10.7 meters downhole. These are excellent grades for a potential heap leach gold target, and we are also seeing excellent metallurgical results from the property, with 8 bottle roll tests returning an average of 97% cyanide soluble gold recovery. A new exploration target sits directly adjacent to this Excelsior zone, where we have defined with surface mapping 3 to 4 parallel mineralized zones to the east of Excelsior. Here, high-grade gold veins and lower-grade sheeted stockwork zones have been sampled, and the targets have been traced along strike for up to 600 meters, and they're open under cover on both ends. These parallel structures have never been drill tested, and with success have the potential to help us build real size in an oxide gold system at the Excelsior zone. Our most exciting new exploration target is the West Gold target, located at the east end of the 3.2 kilometer long Excelsior to Eldorado trend. West Gold contains a 400 meter long by 150 meter wide golden soil anomaly containing the highest golden soil values seen on the property to date. Gold values range from 0.1 to 0.6 grams per ton gold in soils, values that are much higher than the typical gold anomalies we get over our other known gold zones. This target has never been drill tested, and we are hopeful that the large size and high values in soils could potentially translate to larger widths and higher grades in drill holes. So, what are our near-term catalysts, and what can investors get excited about? Well, we currently have a drill program in progress at Gold Range. We are currently putting 4 to 6 holes into our new and exciting West Gold target, and with success, this target could certainly be a game changer for the company. After West Gold, we will test the expansion potential in parallel targets at Excelsior. Again, if successful, these parallel zones have excellent potential to help Excelsior build into a real sizable oxide gold target. KNX has been very active defining gold trends and identifying mineralized zones within this highly prospective and underexplored belt. Drilling is underway. We're testing our best targets, giving it our best shot at things that could really make a meaningful difference to the company. If all goes well, we could look for drill results to start coming out in early May. If you are interested in our project and would like more information, please visit us at our website, www.knxmetals.ca. My name is Shane Ebert. You can contact me through our website. I would be happy to discuss our project and walk you through our plans to continue to create value through discovery. Thanks for your time.
Hi, my name is Jason Lathkauser. I'm the Chief Executive Officer of Pan American Energy Corp. We're a Canadian-listed company that trades under the CSE, PNRG, the OTC, PAANF, and lastly, the Frankfurt Stock Exchange, SS6. We're a company that's focused on expanding the boundaries of the lithium supply chain in North America. We've got a diversified asset base across Canada and the US, with a lithium, cesium, tantalum asset in Northern Ontario, which is a hard rock asset, a brine asset in Utah, located in the Paradox Basin, and lastly, a lithium claystone project in Nevada in the Esmeralda County. For the purpose of the 6 mix, I'm going to focus the conversation in and around where we are actively drilling, which is Nevada at our Horizon Lithium project. This project is hugely exciting for the company because we are permitted for 22 drill holes to a maximum depth of 1,000 feet. Now, there's been a number of catalysts that have taken place in the Esmeralda County of late. One being our immediate neighbor to our north, American Battery Technology, announcing one of the largest claystone lithium projects in North America, 15.8 million tons inferred resource. Further north to us is also American Lithium and their TLC deposit, which recently upgraded their PEA to be well over 10 million ton. As part of our 22-hole drill program, we've currently drilled 7 drill holes as of March 21st, and we are actively progressing at pace and on schedule. In each of our holes, we've observed minimal overburden and clay, potentially lithium-bearing clay at depth. We have yet to hit the basement mineralization, or what's known as bedrock, of the Seabird Formation. This is exactly where our neighbors have found lithium mineralization in significant volumes proximal to our project. So we're very encouraged with early results. We've got samples being sent off for assay to Reno, particularly to ALS in Reno, and we're looking forward to getting those results back. So far, visually, we are hitting great performance on this drill program, and we're excited to keep going. I'd like to thank 6 Mix for the opportunity to present on Pan American. If you have any questions, please feel free to direct them to me on my email at jason@panam-energy.com. That's jason@panam-energy.com. Thank you for watching, and we look forward to connecting with you soon. Take care.
Hi there, Matt Lennox King, President and CEO of Contact Gold, here with you this afternoon. Contact Gold is a Nevada-focused gold explorer and developer listed on the TSX Venture Exchange, and we trade under the symbol C. We are entirely focused on the great mining state of Nevada, which is home to some of the greatest gold mining companies out there, like Nevada Gold Mines. And more recently, we have seen an influx of mid-tier companies back into the great state of Nevada, like Centerra, Orla Mining, and on down the road. At Contact, we've always focused on project quality, and with that, a science-based approach to exploration. That's led us to our Pony Creek project, which is located on the southern end of the prolific Carlin Trend, and our Green Springs project located at the southern end of the equally prolific Cortez Trend. At both projects, we're focused on near-surface, potentially open-pittable gold systems that could become and should become compelling low-cost operations down the road. At Pony Creek, we have an initial resource of 433,000 ounces, all inferred, all near surface, and wide open for growth. And that's something we intend to address in the second half of 2023. Pony Creek is located immediately south of Orla Mining and their recently acquired South Railroad development project on the Carlin Trend. At Green Springs, which is located 7 kilometers to the east of Calibre Mining and their Pan Mine and Gold Rock development project, over the last 2 years, we've delivered some of the most compelling exploration drill results in the state of Nevada, with long runs of high-grade oxide gold and new discoveries and known zones. At Green Springs, those results and the science-based approach and exploration potential that we recognize there led to an earn-in deal with Centerra, signed in December of 2022, whereby Centerra can earn an initial 70% interest by spending or investing into the project $10 million US over the next 4 years, and making cash payments to Contact Gold of $1 million US over that time frame. For 2023 drilling, we anticipate kicking that off in the middle of May in conjunction with Centerra at Green Springs, and Contact Gold will remain the project operator through that program. With that, we do anticipate a catalyst-rich 2023 at both our projects. And on top of that, we continue to push the company forward in the capital markets. As insiders, management, and board, we own approximately 10% of the company. We are fully invested along with the rest of our shareholders and are looking forward to a very successful year here in 2023. With that, you can always find more information on the company at our website, which is contactgold.com, through the info account, which is info@contactgold.com, and through all the regular social media channels. With that, I thank you very much. All the best.
Hi everyone, my name is Ken Brophy and I'm the CEO of Intrepid Metals Corp. Over the next 5 minutes, I'll touch on a few key points that I feel investors should know about Intrepid, with the goal to illustrate why now might be a great time to consider investing in this growing company. First, I feel we are extremely undervalued based on the 3 exciting drill-ready Arizona-based projects that we have added to the company in just the last year. We have a market cap of only 9 to 10 million and under 50 million shares outstanding. And we have an exceptional team that has found, developed, funded, and permitted mining projects in the state of Arizona previously. Before I talk about what we have, I want to touch on how we got to where we are today. Intrepid is a relatively new company that closed its first financing of just over 3 million in May of last year, with Crescat Capital participating in our initial round. Our business goals during 2022 was to build out an Arizona-based portfolio of drill-ready copper and silver projects that we feel have the potential to be developed responsibly and create significant and near-term shareholder value. I feel with the projects that we have acquired, we have achieved that goal, and now we're looking forward to the next stage of our growth. Our newest project is the Corral Copper Project, and it's a district-scale advanced stage exploration opportunity that has over 50,000 meters of drilling within the district and significant shallow copper intercepts within our property. Historical drilling within our patented mining claims, which we only acquired a few weeks ago, included 2 holes that encountered over 100 meters of over 1% copper with various other great results along the way. We have recently announced some of those historical results, as we do have the assay data, which provides us a degree of confidence in the results, yet caution, they are historical results, and we look forward to a confirmation drill program later this year. This year is really interesting, as historically, back in the late 1800s, early 1900s, produced several thousand tons of copper within some of these smaller patented mining claims with grades up to 9.2% copper based on the historical literature. But the various and individually held historical mining claims essentially created a fragmented land ownership structure, which has acted as a barrier to more of a district scale exploration effort. We have been working with local stakeholders on consolidating the fragmented land ownership over the past several months, and we now have over 8,500 acres already tied up. Our Tombstone South project, which is located just south of the historical mining town of Tombstone, produced over 30 million ounces of silver in its day. Previous drilling within our property has identified some of these higher grade silver zones, similar to what was mined within the Tombstone district. However, what is really exciting about this project is the geological similarities to the Taylor deposit that was purchased by South 32 for $1.3 billion in 2018. Similar to the Taylor discovery itself, previous drilling at Tombstone had yet to intercept that lower limestone unit, and those can host these large carbonate replacement deposits. As a first step, we completed a large dipole IP survey last year, which was meant to help us prioritize some of the drill targets. Yet we're very pleased with the results, as we identified a new chargeability anomaly that appears to be located within that contact of the upper Bisbee strata and the lower limestone units, similar to that Taylor deposit geological model. So we're certainly excited to drill that project later this year. Actually, our plan is to drill both Tombstone South and the Corral Copper project later this year, as based on the synergies, both projects are only located 40 kilometers from each other. Last but not least, is our Mesa Well copper project, which was acquired from Bronco Creek EMX royalties last fall. Mesa Well is another drill-ready property located in the Laramide Porphyry Belt of Arizona, which is host to major copper deposits and operations. Mesa Well is a long trend from Freeport's Stafford deposit, located 40 kilometers to the east, and 30 kilometers to the west is Faraday's Copper Creek project. Previous drilling to the south of our Mesa Well property indicated that both the alteration and mineralization intensity increased as the drilling was moving towards our property. So we're excited. Mesa Well has all the right rocks and the right geology. It's in the right area code, and we feel it has potential to be another massive new discovery. So to recap, Intrepid had several drill-ready copper and silver projects that have the potential to create significant shareholder value. All of our projects are located in a stable Tier 1 mining jurisdiction. We have a great team that has extensive experience in each stage of the resource sector, everything from exploration, development, funding, permitting, and operating mines in the state of Arizona. And again, all within a growing company that is well structured with under 50 million shares outstanding and a market cap below 10 million. We're looking forward to a busy 2023. I encourage you to check out our website, intrepidmetals.com, for more information, or reach out to the team at invest@intrepidmetals.com with any questions. Thank you all for your time, and thank you to the SIX team for giving us the opportunity to talk about our company and some of our exciting projects. Thank you.
Hello, I'm Mike Berkey. I'm the Vice President of Corporate Development and a Director with Sitka Gold. So I'm going to tell you why I invest in Sitka Gold. Well, we have a strong management team. It's always about people in this business. We are a technically focused management team. One of our founders and CEO, Corp, is a geologist and a mining technologist. He has a finance background as well. He founded the company along with Don Penner, another geologist with a lot of moss under his feet. Myself, I'm a geologist as well. Greg Dawson, one of our directors, is a geologist. And as geologists, I'll assure the shareholders and people interested in this, we hate working on boring properties. I was the government geologist in Yukon for many years, and you see a lot of good properties and you see some not so good properties, and it's a frustrating task as a geologist to work on a project that you don't believe in, and that's something that this management team can recognize. And we have a great pipeline of projects that we work on. We're focused on discovery. As geologists, of course, it's a big Easter egg hunt, and we're pretty happy when we find something substantial. And we've done that exactly. Our main project is our RC Gold project up in the Yukon. It's an intrusion-related gold deposit in the Tombstone Belt in Yukon. That's the belt that hosts Victoria Gold's Eagle Mine, Banyan Gold's discovery at the Ormac property. Snowline Gold is further to the east in the same belt of rocks, and the Fort Knox mine in Alaska produces in this belt of rocks as well. It's offset this belt of rocks into Alaska. So it's a well-known belt of rocks, but certainly the area between Dawson City and Mayo in the Yukon is an area with very good infrastructure, and it contains many interesting properties. When Victoria Gold went into production, Corp, our CEO, really focused on the area to the west, about 50 kilometers, the Clear Creek area, where there's a number of known intrusive bodies, Tombstone Sweet Intrusive with associated gold mineralization. He compiled a nice land package there. It's about 5 different underlying property owners, put it into a 376 square kilometer package, and that's where we're exploring now. In the last 2 years, we've done about 13,000 meters on the RC Gold property, on the Blackjack and the Eiger zones. We just recently published our initial 43-101 mineral resource estimate, and it is 1.34 million ounces of gold in the inferred category. That's comprised of 2 deposits, the Blackjack and the Eiger. They're located in a structural corridor about 2 kilometers apart, and the Blackjack contains a resource of 900,000 ounces of gold at 0.83 grams per ton, and the Eiger contains 440,000 ounces of gold at a grade of 0.5. Combined, those contain a resource 1.34 million ounces at 0.68 grams per ton. So you compare that to Victoria Gold, the operating mine, just put out, they updated their reserve just last month. They have a mining grade of 0.57 grams per ton. Banyan's resource is 4 million ounces at a grade of 0.6. So we're really very happy with the grade, especially that blackjack. That really impacts the economics, having a higher grade deposit, that 900,000 ounces at 0.83. That comes to surface. There's 2 grams per ton from surface down to 50 meters and a number of drill holes. So it's shown that these intrusion-related bulk tonnage, big targets, aren't necessarily low grade. I mean, 0.83 still isn't, it's not high grade by any stretch of the imagination, but having Victoria Gold next door producing at a lower grade and making money is a pretty good indication that we're very happy with what we have. So assets are very important. We also have the Alpha Gold project in Nevada. That's in the Cortez Trend, only 40 kilometers south of Pipeline, Cortez Hills, and Gold Rush. We've intersected gold-bearing package of carbonate rocks, same rocks equivalent to which host the Nevada Gold Mines projects to the north of us. So that's very exciting. So that's really, we have other projects as well. In Nunavut, we have a copper project, another gold-silver project in Arizona, Burro Creek, with a historical resource on it, and of course another base metal project in the Yukon. We are currently mobilizing out as we speak to our RC Gold project to begin our 10,000 meter resource expansion program. So it's March right now, March 22nd when I'm recording this. So the drill will be spinning by the time this gets up on the internet. And that's really going to be the catalyst. We expect to get results back. Slabs are much quicker in the winter. So we should have drill results in May, and that will help hopefully drive our price. So being able to deliver on an initial mineral resource estimate in 2 years is a great accomplishment. We're very happy. Geologists dream to find a deposit, and we've done exactly that. We've got a great pipeline of properties that we will also work on, and of course a great management team backing everything up. So that's why you should be having a close look at Sitka Gold. Thank you very much.
Apache Copper is a junior Canadian mining company with 3 projects in Mexico. Our team is comprised of seasoned mining executives with expertise in the area of mining, metallurgy, geology, and of course finance. Our team, this team, are CEOs of public companies today. We have a different approach to mining. A mining project can take 10 years to develop. We have decided to start mining on a pilot basis, what's called pilot mining. So we'll do it in a smaller quantity, but enough to make the company financially independent. This is what I mean. We can readily start mining about 1,000 tons per month, which is really nothing. But we can sell those tons at $350 per ton. That means revenues of about $350,000 every month, over $4 million a year. We have already negotiated this sale with a major metal trading company. Our 3 projects are a copper silver deposit named Huizachal in Tamaulipas, Mexico, which has a potential of about 160 million tons, of which 100 million tons are in disseminated copper with an estimated grade of 0.08% copper and 1 ounce per ton in silver. Recently, last year, we acquired two additional projects comprised of 8 mineral concessions in Mexico as well, and on an area of 2,100 hectares. That is a very interesting project because one is a polymetallic, La Purísima project, high-grade zinc, and the other one is an open bridge, 2.7 kilometers long, like an avenue, to put it graphically, which is 2.7 kilometers long, 90 meters wide, and a potential of 250 meters deep. A third party has estimated a potential there of 60 million tons. And at the grades that we have been able to find, can be a world-class deposit. On top of that, we have developed and owned property, the intellectual property, to a disruptive copper process. We have copper oxides here from Huizachal. This is malachite, 2 to 3% copper. And to produce copper from this mineral, you need a electrowinning plant whose main cost component is electric power. We do this transformation into metallic copper like this, without the use of electric power, which is the main cost component. That makes our process revolutionary and most economic in the industry. We also made an investment in a Papua New Guinea company last year, and we took almost a controlling position in that company. Company is called Ayaba Minerals, was called Ayaba Minerals, changed its name to Apache Aba Minerals, and we took that position at 2 cents per share. Just last week, a new group from Australia has committed to put $7 million Australian dollars into the company at a share price of 10 cents Australian, or about 8 cents per share. That means a 4-bagger in 1 year. So our plan is to start pilot mining from La Purísima, the polymetallic mine, which is the easiest one, and do that within the next 3 to 6 months, since the metallurgical process is very, very easy. So any further information that you may need, I invite you to visit our website, apachecopper.co, or email me and I will reply to any of your questions. Thanks for being with us.
Hi, my name is Darren Campbell. I'm the president of Namibia Critical Metals. Standard disclosure on forward-looking statements during this presentation. So Namibia Critical Metals is developing a Tier 1 heavy rare earth project in central Namibia. Our Loftel project is a globally significant deposit of the heavy rare earth metals dysprosium and terbium, which are critical metals used in the production of permanent magnets for EV motors, wind turbines, and other electronics. Loftel is fully permitted with a 25-year mining license and all environmental clearance certificates issued. And it is also development funded under our joint venture with the Japanese government agency JOGMEC, the Japan Organization for Metals and Energy Security. Namibia is one of the top investment destinations in all of Africa. We've been operating there since about 2008 and have an excellent relationship with all levels of government and in the community in which we work. We are traded on the TSX Venture and on the OTC markets in the US. We have 196 million shares outstanding and are very tightly held, 24% owned by officers and directors. And our largest single shareholder owns about 42%, which is the Australian listed entity Bannerman Energy, which is developing a uranium project also in Namibia. Over the last 2.5 years, we've made some really impressive achievements in developing our Loftel project with our JOGMEC partners. A very valid criticism against the project historically was that it was just too small, with only initially a 6 million ton resource and a 6-year mine life. In 2020, with our JOGMEC partners, we drilled an additional 16,000 meters at Loftel and made a massive increase to the size of the resource. bringing it from 6 million tons to 53 million tons of total rare earth oxide. And the amount of contained dysprosium and terbium at Loftel clearly elevates it to being one of the largest deposits of these truly rare heavy rare earth metals anywhere in the world outside of China. In July of 21, we were issued a 25-year mining license. So as a result of these two achievements, we've accelerated into pilot scale testing. We blasted a starter pit in November of 21 and mined about 34,000 tons of ore representative material to do pilot scale processing work. All of that work and the new resource were compiled into an updated preliminary economic assessment in October of 2022 for the much larger Loftel 2B4 project. And it delivered a fairly robust economic output of about 2,000 tons trio production per year, just under 400 million US NPV with a post-tax internal rate of return of about 28% and a 16-year mine life on a fairly modest capex. In November of last year, our JOGMEC partners announced they were starting a public tender process in Japan to bring in a Japanese industrial partner, similar to what they did with Sojitz coming in with them in partnering with Lynas. So we're excited about the potential for this to really rapidly accelerate through feasibility and into production. In January of this year, we announced that we are now starting into a PFS with currently ongoing infill resource drilling happening right now. So in total, we've got about $33 million invested into this project. We've done extensive drilling, about 45,000 meters of diamond drilling. Currently, about 8,000 meters of RC drilling is going on right now in that resource and infill drilling program, and another 7,000 or 8,000 meters will be drilled later in the year. And we believe that's just the tip of the iceberg. But 90% of our resources contained down here in Area 4. We established our first satellite deposit known as Area 2B and added an additional 4 million tons with only 4,000 meters of drilling. And our geological team believe they've established high-value additional exploration targets between 5A to 5F here that we will be exploring later in the year, which gives us a great degree of confidence that this project will be in operation for decades, not years. Just as important as cracking the geological code, particularly for a rare earth project, is to be able to understand how to effectively and economically extract it and process it. We've, through a lot of trial and error, working with all of the top processing consultants all over the world over the last decade, from Australia, South Africa, Germany, and Canada, we now believe we've also cracked the processing code. Through much trial and error, we've simplified our processing flow sheet and have locked it in, have added on a hydrometallurgical circuit at the end to produce a highly enriched uranium and thorium free mixed rare earth oxide, which is highly enriched to the tune of about 80 to 86% of heavy rare earth oxides. So we are really excited about the trajectory that our Loftel project is on over the next year as we continue to really accelerate through feasibility and into production with our JOGMEC partners. We believe we have the right project, the right team, in the right place at the right time. Thank you very much.
Hi everyone, my name is Marco Rock and I'm the President and CEO of Cassiar Gold. Cassiar Gold is a Canadian gold explorer focused on our flagship by the same name, the Cassiar Gold Project, which is located in northern British Columbia in Canada. Now, the three things that really set us apart as a company is the fact that the first one is the fact that we have really outstanding access and infrastructure. We have Highway 37, Provincial Highway 37 bisecting our property in half. We have power and water access. We have a permanent camp. We already have mining permits. We have a fully owned and permitted 300-ton per day mill. We have 25 kilometers of underground development already sunk in and 160 kilometers of property access roads. The replacement value of this infrastructure alone is probably worth multiple times our market cap. Our second thing that really sets us apart is our resource and resource potential. This infrastructure is only as valuable as that. So we are very lucky. We have a foundational resource at Taurus of 1.4 million ounces at 1.14 grams per ton right at surface, and where 90% of those 1.4 million ounces occur within 150 meters from surface, so a very shallow ore body that is effectively open in all directions laterally and at depth. In addition to that, we also have these high-grade veins at Cassiar South, where most of the historical production has come from. 315,000 ounces were produced at nearly 16 grams per ton. We have these high-grade veins that, for the most part, are open along strike with a lot of room for extending these veins, looking for offsets of these veins, as well as a lot of potential for parallel and stacked blind vein systems of potentially the same grade nature. In addition to that, we, in our 59,000 hectare land package that is 100% owned, we have multiple regional scale targets and min-file occurrences, some of which are Taurus lookalikes, and others are more similar to the high-grade underground veins that we have at Cassiar South. So a lot of exploration potential. In fact, last year we drilled our largest drill campaign to date, 23,000 meters, which is expansionary for the most part, for which we still have 10,000 meters to release over the next few weeks. Now, the third thing that really sets us apart is our team. We have a great asset, we have existing infrastructure, we have exploration potential, but we also have an outstanding team to go along with these assets. Our chairman, Steve Ledwin, is a former president, CEO of AEM Gold. We also have Steve Robertson, a geologist. We got the Schultz Award for Excellence in Mine Development for his work at Red Chris, where he was in charge of permitting and development. Red Chris is just 200 kilometers south of us on Highway 37. We also have Chris Stewart on our board. He's a mining engineer and the CEO of Minto Metals, a copper producer in the Yukon. We also have James Maxwell, a geologist as well, and the former exploration director for Sabina Gold and Silver. On the technical advisory team, we are very, very lucky to have David Rees, arguably the most sought after structural and economic geologist in orogenic gold systems, which is the type of system that we have. We also have the great Doug Kerwin, the Lizzie Award recipient, and we also have Vern Sheen. Vern has helped, he comes from the BIMA B2 Gold Group. His expertise is really taking advanced deposits, doing edge drilling, then taking those deposits through metallurgical and economic studies and eventually into production. Vern has helped define resource reserves of nearly 8 million ounces. 5 million of those ounces are now in production. Now, we also have social license to operate, and we are very, very attractively valued. Our market cap is roughly right now 45 million Canadian. We have just under 5 million Canadian in the bank. And as I was mentioning just before, in terms of catalysts, last year we drilled our largest drill campaign to date, 23,000 meters of expansionary drilling. We've already released 13,000 meters of drill results, quite spectacular results. I encourage you to have a look, but we still have 10,000 meters of drilling coming over the next few weeks. And in addition to that, in May, we're already opening camp, and we're looking to start our new drill campaign in the first week of June. We already have 3 rigs secured, and we're looking to drill 20 to 25,000 meters to continue on the excellent work we've been doing on the last few years and keep on expanding this resource and advancing this asset and taking it to the next level. So I invite you to come and have a look, have a conversation, and know more about the Cassiar Gold project. Thank you so much for listening.
Hello, my name is Grant Moore and I'm the CEO of SPC Nickel Corp. I'd like to take this opportunity to provide you with a bit of an introduction to SPC Nickel and hopefully convince you why I feel SPC is one of the more attractive nickel opportunities out there. SPC began trading on the TSXV in March of 2021 under the ticker symbol SPC. SPC is 100% focused on nickel and primarily on the exploration, discovery, and the development of high-quality nickel assets within North America. We currently have 4 projects across Canada that range from our large camp-scale Muskox project located in northern Canada to our more advanced projects within the Sudbury mining camp that either have past production or host existing resources that we are currently advancing towards a production decision. What I feel that makes SPC Nickel unique is that we're one of the few junior nickel companies on the TSXV that is actively exploring properties with resources within an established nickel camp. And in our case, that's the Sudbury mining camp, which from past production, current resources, reserves, has in excess of 1.7 billion tons of contained metal. So this is a large camp with numerous high-grade deposits that is primarily controlled by both Vale Canada and Glencore. So SPC is uniquely positioned to be one of the few junior companies in the Sudbury Basin actively exploring. Our flagship project in Sudbury is called the Lockerbie East project. We acquired this former Falconbridge property in 2016, and at the time it hosts two historic resources, the past producing Lockerbie East mine and the large near-surface West Graham deposit. The Lockerbie East deposit was previously mined from underground and hosts a resource of 200,000 tons of around 3% nickel equivalents. And based on the work that we've done, we feel that deposit is open for another 1,000 meters at depth. The main asset on the property is a West Graham deposit, which has combined indicated and inferred resources of over 10 million tons at about a 0.6 nickel equivalents. This is a large near-surface resource very close to infrastructure and is really the flagship project for SPC. In 2022, we did a 5,200-meter drill program at West Graham, where we were looking at trying to better understand the controls of mineralization and the distribution of mineralization. And what we found out is that there is a fairly significant high-grade core where values up to 1% nickel exist, and those values and grades seem to increase as we move towards the property boundary with our neighbor, Vale Canada. So as a result of this work, we initiated some discussions with Vale regarding the adjacent property, which is called Crean Hill number 3. And we were happy that in January of 2023, we were able to announce that we'd signed an option agreement with Vale where SPC can acquire 100% interest in the Crean Hill 3 property. And this was a real game changer for SPC. The West Graham Crean Hill 3 properties essentially host a resource, historic resource, I should note, of in excess of 20 million tons. The historic resource on the Crean Hill 3 side, based on internal documents from INCO, is almost 17 million tons at very similar grades. So this is a large deposit, very close to surface. In fact, it outcrops on surface on the Vale property that we are currently advancing towards a production decision. Earlier this month, we announced that we started our phase 1 5,000 meter drill program, which is part of a much larger 25,000 meter drill program, which is aimed at doing the infill drilling required in order for us to produce an updated resource by the end of the year. So far, we've completed eight holes for 1,000 meters. Happy with the results that we've got back so far, and the crews are actively busy logging core, processing samples, getting that information and those samples out to the labs so that we'll be able to bring those results to the market over the months to come. I hope that provides you with a bit of an introduction to SPC. I encourage you to visit our website at www.spcnickel.com, or if you'd like to have further discussions, you can reach out to me at info@spcnickel.com. Thank you.
Hello, my name is Philip Cloutier, President and CEO of Cartier Resources, ticker symbol ECR on the TSXV. We're a gold exploration company based out of Val-d'Or, Quebec. Our flagship property is the Chimo Mine project, which is a past-producing gold mine that ceased production in 1997. Since acquiring it in 2013 via bankruptcy sale, we've attracted the sponsorship of two major shareholders. We've drilled 60,000 meters produced 4 resource estimates that now stand at a combined inferred and indicated of 2.3 million ounces of gold. And we're currently drilling with 2 diamond drill rigs and set to publish a maiden PEA for the project. If you need additional information, please do not hesitate to contact me at Philippe Cloutier at resourcecartier.com, philippe.cloutier at resourcecartier.com, or via our website. Thank you very much.
AEM Metals Corporation is a Canadian-listed company listed on the Toronto Venture Exchange under the ticker EMM, and our objective is to be a low-carbon producer of critical battery raw materials for the decarbonisation drive. Our flagship asset is the Cahill project in southern Botswana. This is a high-quality manganese asset, which we're looking to develop as an integrated producer of high-purity manganese sulfate monohydrate, or HPMSM. This is a lithium-ion cathode material principally used in NMC, or nickel cobalt manganese battery formulations used by electric vehicles. And 95% of the production capacity globally currently sits within China. And so there is a very clear demand from both battery manufacturers and automotive companies to find alternative sources outside of China for this material. And Cahill is one of only a handful of projects at feasibility stage looking to come into production in the next few years. We're currently building a demonstration plant in Johannesburg to demonstrate that our ore can indeed be used to produce our low carbon, high purity sulfate product. And that plant should be in production and sending samples out to OEMs and battery manufacturers in the second half of this year for testing and qualification purposes. At the same time, we're also looking to upgrade the existing Cahill resource and move the current 2.1 million tons of indicated resources to include an additional 3 million tons of inferred resource, and also look for a maiden resource at our second project, Otse, and both of those MREs should be due out in the first half of this year. At the same time as we're looking at expanding the overall project base, we have started the licensing and permitting applications, and our environmental social impact statement will be submitted to the government of Botswana in the coming weeks. And that will be the first step, not only in achieving our environmental authorization, but also facilitating a full 25-year mine license for the project. And we are hopeful that that can be achieved in the next 12 months, particularly given the world-class mining jurisdiction that is Botswana, where our flagship asset sits. So 2023 will be a pivotal year for Guyana. We believe it'll be a very exciting year, one where we will see the company grow from being an exploration development company and taking serious, significant steps towards becoming a construction-ready company. And we would very much like you to join us on that journey this year. Thank you.
Hi, everyone. Thank you for tuning in to Faraday Copper's presentation today. I'm Graham Richardson, I'm the Chief Financial Officer. Faraday trades on the TSX under the symbol FDY and on the OTCQX under the symbol CPPKF. I'd like to draw your attention to our cautionary statements, as we will be making forward-looking statements throughout this presentation. So in terms of some highlights, our flagship asset, Copper Creek in Arizona, is one of the largest undeveloped copper assets in the United States, with over 3.9 billion pounds of copper in the measured and indicated category. We believe that the scarcity of development-ready copper asset provides an excellent opportunity for the Copper Creek project moving forward. Our strategy is looking at delivery of a preliminary economic assessment on a combined open pit and underground operation, which is expected in the second quarter of 2023, and this will demonstrate the economic viability of Copper Creek. We're also targeting growth of the mineral resource beyond the PEA through definition of high-grade zones and step-out drilling through our active 10,000-meter Phase 2 drill program. We're also targeting new discoveries in what we view as an underexplored district. There's over 400 breccias that have been mapped on the property, and only 35 have been drill tested. Breccias offer the potential for high copper mineralization, 1 to 3% near surface, and underpin the open pit potential. We are well funded, having recently completed a Canadian $40 million financing in the middle of February. We were well supported by our key strategic investors, including the Lundin family, Murray Edwards, and Pierre Lassonde, as well as strong institutional support. And we believe that we're a compelling investment as we're undervalued relative to the size of our asset and other similar US copper projects. One of our mantras at Faraday Copper is about bringing a senior company mindset or expertise to the work that we do. And so we have a very experienced management team and board, all coming from senior company backgrounds such as Newmont, Barrick, Randgold, Gold Corp, among others. And we all have a track record of advancing assets and value creation. In terms of where we are, so Copper Creek's located at the confluence of two main copper porphyry trends in southwestern Arizona in the heart of copper country. It's about a 65 square kilometer land package and a historic mining area. There's small scale activities that date back to the late 1800s. The project benefits from pre-existing roads that connect it with regional infrastructure, including highways, rail, and power. And the site's about 20 kilometers from the old San Manuel Kalamazoo mine owned by BHP. That mine operated for almost 50 years and produced over 700 million tons of ore, largely from a sizable block cave. And we see San Manuel as a good reference point for the bulk mining potential at Copper Creek. The current mineral resource estimate, just published in July, shows about 430 million tons, or just over 4.5 billion pounds in the MI and I category. This resource was fully geologically constrained. It's had open pit and underground geotechnical studies and extensive metallurgical test work that showed there was good recoveries from the sulfides. This is a primary sulfide project. Good concentrate grade, it's a clean concentrate, low potential for acid generation in the waste rock, and importantly, our underground grade is fully diluted as we are envisioning a bulk underground mining method. So in June of 2022, we completed our 6,000 meter phase 1 drill program. This is a cross section of one of the highlights. So this is a deeper hole into the keel where we intersected significantly higher grade mineralization than what was in the underground footprint for the current mineral resource estimate. In addition, exciting, we had over 19 meters, over 4% copper that extends below the current footprint of the mineral resource estimate, as well as mineralization to the west of the mineral resource estimate footprint. And so this for us offers the opportunity to further grow that underground resource through additional drilling. Here's another cross-section in the open pit where we defined new near-surface mineralized zones in areas that were previously demarcated as waste. In addition, we have mineralization that was occurring outside of the resource constraints and outside of the current pit shapes. And so, again, it's encouraging for us the ability to further grow that mineral resource estimate with additional step-out drilling around the pits. As of today, we're a little over halfway through a 10,000 meter phase 2 drill program. It's really targeting 3 areas. Expanding the mineral resource beyond what the PEA will capture, better delineation of high-grade mineralized zones, and reconnaissance drilling on new generative targets on the property. And so far, we've released several holes from this program. This one was particularly exciting, where we intersected massive sulfides just outside the current open pit resource. It was about 15 meters at almost 11% copper with elevated gold grades. We've planned follow-up drilling on this target, and in addition, we're completing a review of the gold assay coverage on the property and plan to test certain domains for additional gold-bearing material, which is really exciting to the upside beyond what we currently have in our mineral resource estimate. And so turning to the exploration potential of the property, over 90% of the over 200,000 meters of drilling has been conducted in the resource area. And so we see a lot of exploration upside with the 400 breccias that have been mapped at surface. Right now, we have a dedicated generative team that's mapping, sampling, flying geophysical surveys, which we'll use to rate and rank the targets outside of the resource area. We have a 20,000 meter phase 3 drill program that we expect to commence in the fourth quarter of 2023. And a significant portion of that will be directed at testing these generative targets. And so for us, it's really exciting, not only the PEA, but also the potential to grow this resource significantly through new discoveries. And so in summary, at Faraday, we're developing a U.S. domestic source of copper. We believe that with the scarcity of development-ready copper projects, the large undeveloped mineral resource, the exploration upside, and the management team and financial backing, that we're well positioned to deliver on a value opportunity. Thank you very much for taking the time to listen, and hope you have a good day. Thank you.
Hello, my name is Dallas Davis, President of Edge Exploration Inc. I greatly appreciate 6IX for inviting me to speak at this Mixed Leaders in Mining conference. In 2019, an unlisted New Brunswick firm called Edge Exploration Inc. was founded on the premise or on the strength of a gold discovery 35 kilometers west of the province's capital city, Fredericton, just in time to take on the challenge of COVID. However, with a low overhead, rural office in the middle of our initial southwest New Brunswick underexplored area of focus, we have done very well to advance 5 grassroots properties totaling 94 square kilometers. With additional geochemistry, geophysics, and drilling, we are now to the point where the current 4 shareholders and any new shareholders will be rewarded once the company is listed. To date, we have undertaken some 600,000 in exploration work, and only 816,000 shares are outstanding. Reasons for our optimism for Edge projects in southwest New Brunswick are the initial claim where gold was discovered by panning has proven to have at least 3 vital targets with soil values as high as 405 parts per billion gold and 106 times background in this outcrop scarce property. The bonus is the battery metal potential, with antimony in the soil as high as 539 times background, and lithium, both in bedrock to 251 ppm and in soil over a pegmatitic granite contact zone as high as 114 parts per billion by reconnaissance MMI plus anomalous cesium, tantalum, titanium, and niobium. This property is some 12 kilometers from a past antimony producer. A claim of gold to plus 5 grams per ton in an area of thick overburden and visible gold flakes in multiple samples obtained by core drilling to bedrock on another property is also very encouraging. A claim with only soil sampling on a reconnaissance basis by MMI protocol returned 5,906 ppb heavy rare earths, as well as 1,836 ppb light rare earths. Phosphorus was 5,800 ppb and uranium 1,100 ppb. A newly registered 36 claims covering 90 square kilometers over lithium in pegmatite targets selected based on government magnetic and soil till geochemistry and LIDAR, plus Sentinel-2 satellite data interpretation as processed by Dr. Neil Pendock for 16 lithium and lithium-related minerals. In addition, an interpreted clay horizon above lithium-bearing rhyolitic tuff bounding a sizable volcanic caldera, analogous to the Clayton Valley and Thacker Pass settings in the McDermott caldera of Nevada. If you have any questions concerning Edge projects, the purchase of EDGE shares, or the option or earn-in on any or all of our projects, Adrian Davis, EDGE's senior geologist, exploration geologist, or I would happily answer them. Our respective numbers are 506-238-4866 and 506-449-2665. Please visit edgeexploration.com for additional details on contacting us. Thank you for your time, and EDGE looks forward to future discussions on our properties.
Hi, my name is Rob Stevens, and I want to tell you about mineral exploration and mining essentials. I am the author and publisher of this best-selling book, Mineral Exploration and Mining Essentials, that is available on Amazon.com, as well as the presenter for some engaging and informative courses for investors on the mineral exploration and mining industry. So, who is the book and the courses designed for? Well, they're designed for investors, people just like yourself, management and directors of exploration and mining companies, professionals such as lawyers and accountants, regulators, and others involved in managing or being involved in the mining industry, including community members and civil society. And what does the book and the courses cover? Well, really, it covers the entire life cycle of the mining industry, including an industry overview, geology and mineral deposits, mineral exploration, resources and reserves and feasibility studies, mining, both surface and underground, as well as mineral processing, environmental considerations, and also evaluating exploration companies and technical news releases. And just to give you a little bit of a testimonial for it, here is a quote from Bill Powers at miningstockeducation.com from December 2021. And what Bill says about the book is that Mineral Exploration and Mining Essentials is the single best book available for new mining investors. Using clear explanations and quality illustrations, Dr. Stevens takes complex geological concepts and makes them understandable for investors. It is the best primer for those who want to build a depth of knowledge about mineral exploration and mining essentials. Now, in addition to the book, there are online courses that are available. You can see the URL here, miningcourses.thinkific.com. There's 3 courses, a short course, a full course, and then a smaller one on evaluating exploration companies and news releases. And for those of you listening to the video today, we're offering a 15% discount using the code 6IX when you go and register at that site. So let's just take a quick run through some of the things that you would see in the book and in the courses. So really, we're going to talk about the entire mining life cycle. This is kind of a snapshot of the whole thing, from exploration through to mine operation, smelting and refining, and right through to closure and reclamation. We'll look at things like metal prices in the industry overview, and here we are today near the end of March with gold at $19.95 an ounce. Probably will break 2,000 pretty quickly here. We'll look at global trends and things like mineral exploration expenditures and give you a sense of why they go up and they go down as they do. We'll talk about geology and mineral deposits, how some of the important mineral deposits form, what they look like these, this is what we'd call a tabular gold deposit in this case, or those very large porphyry copper gold deposits, which are particularly important as we move forward with the need for so much additional copper production in the coming years. We'll look at mineral exploration, like trenching and why that's used, or soil sampling and the benefits and the way in which you can look at and interpret soil sampling or stream sediment sampling. We'll spend a fair bit of time talking about drilling, outlining the reasons why people drill, for discovery, for expansion, or for infill. It will really help you with interpreting and understanding news releases on drilling results. From there, we'll get into resources and reserves and feasibility studies. So how is a grade and tonnage calculated? And then how does that factor into a feasibility study that will provide you with some economic parameters around the economic viability of developing a new mining operation? We'll talk about mining, both surface mining and underground mining. And for those of you who take the course, there'll be a few videos on blasting because everybody always likes a video on blasting. And then a little bit into processing. So how are we recovering those valuable commodities out of the products that we've mined so that we can ultimately pour a gold bar like we can see in this image here. And finally, we'll do a bit on social and environmental considerations, looking at things like sustainable development, environmental assessment, community engagement, and mine closure. So the book Mineral Exploration and Mining Essentials is available at Amazon.com or in Canada.ca or in Australia at .au. And the courses are available at miningcourses.thinkific.com. And again, there's a 15% discount available on those courses using the code 6IX. For those of you where that's too many URLs for you, just go to miningessentials.com and you can find out all the information about the courses and the books on that website. And I thank 6IX very much for this opportunity to present to you. And I hope to see you in the courses or reading my book at some point. Thank you very much.
Hi, my name's Peter Latta. I'm president of Silver Wolf Exploration. We are a mineral exploration company focused on the Ana Maria project in Durango, Mexico. We're looking for silver, lead, zinc, as well as gold. I'm very bullish about the metals market as a result of the energy transition that's taking place, the decarbonization that's taking place. It's what really fires me up and gets me up in the morning, realizing that in order to change the economy to something that is a lot lower carbon intensity, we're going to need a lot of different metals. And silver is a big component of that because it is the most efficient conductor. And certainly copper and certainly lead and zinc and all the metals. But silver is going to be a key component of that. Silver is a very small market, so it doesn't take a lot of outside capital to move it significantly. So silver can be very volatile in price, but that also means that it can move quite quickly to the upside. And that's what we're expecting here in the coming months. As a result, we've positioned ourselves as a silver exploration company. We have a lot of experience in Durango, Mexico with our sister company, or I should say through our sister company, Avino Silver and Gold. They've been operating in Durango for over 55 years. We're using some of the same geologists and sharing resources when we can. We have an absolutely fantastic team of geologists as well as operators. We're about to do our first ever drill program on the property. So we've optioned this property from Avino, and there's been no modern exploration done. So over the last 2 years, we've pounded the pavement and done a lot of groundwork on the property to develop some fantastic drill targets that we need to test and hopefully make a discovery. And that can be quite significant for a little company. We don't have a lot of shares outstanding, only 35 million shares outstanding. We trade on the TSX Venture under the symbol SWLF. And if we do end up hitting something and making a discovery, that can be pretty substantial as far as a value increase for the shares of the company. So it's something we're very excited about, something we believe that we can do, and something that we're going to soon find out. So as I mentioned, the drill program is going to go on later this year. We spent the last couple of years targeting with our team. And I would encourage everyone to check out our website, download our presentation to get more details. I don't have too much time to talk about the technical details of the project, but that is our focus. Certainly silver discovery in Durango, Mexico. Mexico is the largest silver producer in the world. It's a good address, a good place to be if you're looking for silver. And we believe we have the project to do that. So please check us out. Once again, that's Silver Wolf Exploration, SWLF, on the TSX Venture. Thank you very much. Bye-bye.
Hi, everyone. My name is Chad Peters. I'm president and CEO of Ridgeline Minerals.
Ridgeline trades on the TSX Venture under RDG and the OTCQB under RDGMF. You can also find a copy of this deck on our website at ridgelineminerals.com. I don't have much time, so I'm going to get right to it. So Ridgeline is a Western U.S. focused precious and base metal explorer. We have 6 projects across 192 square kilometers. That includes a high-grade CRD discovery at our Salina project and a $30 million U.S. joint venture earn-in with Nevada Gold Mines at our Swift project. So management owns 13%. I myself own fixed 5.6% as the largest individual shareholder. We have about 68 million shares issued and outstanding, and about 84 million shares fully diluted, with a great shareholder base that's backed us over the years. So location is key, right? We have our flagship in Nevada at our Salina project here. Our joint venture with Nevada Gold Mines is at Swift. This is located on the Battle Mountain Eureka Trend. And then we have a pipeline of projects, both, we have our projects in the Carlin Trend. We have our early stage copper play at our Big Blue project. And we have our Robert Gulch project, which is just over the border in Idaho, which is an analog to Liberty Gold's Black Pine deposit. So today we're going to focus on both Salina and Swift. They're definitely our flagships. What I really want to highlight at Salina is scale. Right, we've defined over 3.7 kilometers of continuous strike with drilling. And just for comparison, some of the biggest deposits, CRD deposits in the world, like Hermosa Taylor, this deposit is 4 kilometers long. So we already know that we have the potential scale to host a large, significant CRD. We also know we have grade. We've drilled up to 6 meters of 480 grams silver, 18.5% lead zinc. In hole 45, just under 5 meters of 421 silver and about 8% lead zinc with a little bit of gold in hole 24. Just for comparison, you look at projects like Cinco de Mayo or Hilltop, and you're seeing grades that fall into similar categories, right? So we know that we have scale, we know that we have grade, but we do have to drill this thing. And I think that's the next step, is moving it to a maiden resource. So the project sits right beside the Butte Valley Porphyry. This is a $33 million joint venture with Freeport-McMoRan and Butte Valley Falcon Butte Minerals. We own everything in yellow at Salina. You take a look at the project itself. Really important to point out when I talk about scale is what we've been able to define so far. So the project sits, we have over 7 kilometers of continuous strike across 3 deposit types and 5 main target areas. Chinchilla is our most advanced. I want to show you that right now. Chinchilla is fed by these feeder faults. You can see right here, all these vertical feeder faults are bleeding in the mineralizing fluids. We have strong mineralization for over 1.2 kilometers, starting at surface over here and continuing down dip to a depth of 200 meters. We also stepped over 2.5 kilometers away from the Chinchilla deposit in 2022, and we hit a significant intercept of CRD mineralization that ran 3 meters of 40 grams silver, 7% lead zinc, and 3 grams per ton gold, which is suggesting, although it's only one hole, that both zinc and gold grades are increasing as we drill back towards this porphyry. So you take a look at this in section view. Really want to point out, these are these feeder faults. You get chimney-style mineralization bleeding off of those faults, which is what we just mentioned and what we drilled. And we need to both drill along strike and deeper within these carbonates. And we think we can find additional zones of stacked mineralization alongside these fault zones. Really important to point out, we've drilled up to 0.5 meter of 1,800 grams silver, 2.2% tungsten, a little bit of lead, zinc, and gold, and actually 0.5% copper in this intercept as well, which isn't noted in this section. So lots of potential to find a polymetallic high-grade deposit that extends for quite a distance toward this porphyry. I want to mention at Swift, this is this option deal with Nevada Gold Mines. You look at the property itself. Sorry, the model's taking a second to load. We're here on the Cortez Trend. You have over 50 million ounces of past production and current reserves owned by Nevada Gold Mines here at this, here at this project. That's not supposed to happen. There we go. Got it working, sorry. And you can see we have the same style of mineralization, same type of target at our Swift project as at Pipeline, Cortez Hills, and Gold Rush. So Nevada Gold Mines has drilled multiple holes on the project already. They spent 4.9 million US. They've drilled up to 51 meters of 0.2, 48 meters of 0.45, right around here. We're directly on trend of all of these deposits that sit on the Cortez district. And just for a scale perspective, if you were to take our project area here and lay it over top like we did here in yellow, you could fit the Gold Rush 4 Mile, Cortez Hills, and Cortez open pit in this deposit, which is over 35 million ounces of gold just in that outline itself. So great discovery potential. Nevada Gold Mines is having a lot of success there so far. They're actually already mentioning Swift as a tier 1 exploration target within their Nevada portfolio. So great potential, lots of money being spent on drilling, fully funded by our partners. And if anyone would like to chat with me about our other pipeline projects or the projects that we just discussed, this is my personal information. So feel free to contact me anytime. Thank you.
Hello, my name is Hugh Agro. I'm the president and CEO of Revival Gold. Revival is advancing the 4 million ounce Bear Track Arnett gold project located in the western U.S. state of Idaho. We've been exploring along a 5.5 kilometer trend of mineralization, and we've hit with every drill hole into the system. Our finding cost is running at less than $5 an ounce discovered. Most recently, we've been drilling in the high-grade Jaws target area, where we now have 20 drill holes that have outlined a core of mineralization grading just under 8 grams per ton gold over a kilometer of strike. Bear Track Arnett is a unique project. It's got brownfields infrastructure, power to site, roads to site, an existing gold processing facility, which we can refurbish to begin producing gold in this gold price cycle. Currently, we're working on a PFS for the restart of production in that first phase of operation. We're envisioning something in the order of 65 to 70,000 ounces a year of gold production from an open pit heap leach restart of the operation. Beyond that, we've got this large resource and the opportunity to put in a mill operation, which we envision producing something in the order of 250,000 ounces a year of gold from this outstanding location. Idaho is ranked top 10 in the world for exploration and mining. And with the gold industry producing something like 120, 130 ounces a year of gold and only discovering about 10 or 20 million ounces a year of gold, there's going to be a great opportunity for explorer developers in great locations like Revival Gold. Revival trades on the OTCQX market in the US under the symbol RVLGF, and in Canada on the Venture Exchange under the symbol RVG. We have a market cap of just under 70 million Canadian dollars, and we're trading at about $12 or $13 an ounce in the ground. Exceptional value, great location, and exploration sizzle. Revival Gold offers it all. Watch for our PFS and our resource update to come mid-year. Thank you for watching. If you need more information, please visit our website at www.revival-gold.com.
Good day. My name is Kevin Brewer. I'm President and CEO of CMC Metals Limited. We trade on the Toronto Stock Exchange, the Venture Stock Exchange. Our symbol is CMB. Well, many of you may be aware that we intend to drill on our Silverknife property in north central BC. This property is immediately adjacent to one of the highest grade silver lead zinc underground mines in the world. It's owned by Core Mining, and it's literally only 1.5 kilometers away from our target exploration area on the Silverknife property. These type of deposits form in clusters, so it's not unusual that you would find a prospect like ours in close proximity to the mine. And as we often say, the best place to look for a mine is near a mine. So there we go. On that property, we do have a number of very positive features. Similar geology, very strong geophysical signature, including conductors that were identified during our March 2021 airborne survey of the area. And from that, we've done additional ground gravity geophysical surveys that have identified a couple of new discoveries. And as a result of those discoveries, those are the items we're going to drill in July of this year. We also have the former Silverknife prospect, And that's on the other side of a thrust fault, just to the south of where we plan to drill this year. And on that prospect right now, we are geologically modeling it in a leapfrog model. And we hope to then marry that data with the conductive data that we already have, the conductive and magnetic data that we gathered. And in addition, we plan to extend our gravity surveys over that prospect so that we'll have the 3 sets of data to really identify possible drill prospects in that area. That was a prospect that was well defined back in the 80s, but it's considered to be open and have lots of potential for further expansion. So that's a great prospect in itself. And we've also announced the drilling contract recently. So we awarded the contract to Flamingo Drilling of Calgary. We're very happy to have them. They have a highly mobile drill that's easy for us to move with limited ground effects. So that's always important. So we try to minimize ground impacts in all of our sites as much as we can to reduce reclamation and be responsible in our exploration plan. The other thing you will notice is that we recently announced this commencement of an induced polarization survey on our Bridal Veil property in central Newfoundland. This is important because we've kind of been picking around with the property and doing soils and doing some sampling of some outcrops and identifying structures in the mapping. And we've also done a ground magnetic survey, which identified a significant contact between the Gander Lake granite and localized metasediments. And we are now testing a pilot area to see if we have the potential for sulfide mineralization on the property. With positive results, that could change the whole picture on that property and significantly increase its potential. And as we know, just a little around 12 to 15 kilometers away, you have the big Grub Line project of newfound gold, the Queensway Gold Project, which is one of the most significant gold discoveries in Newfoundland and in Canada, for that matter, in recent times. So wouldn't be surprising that some of the outlying areas also have similar alteration and mineralization associated with them. So we hope that's the case at Bridal Veil. We continue to work on a variety of projects as well, and we will update everyone. I must apologize to shareholders and investors. We are getting the news out on Silverheart soon. I know you keep hearing me saying that, but we've had to take a long time to get the data in. We had a change in personnel that affected us. And as a result, we contracted some of the work out, and I'm also doing a lot myself. I was working on soils all morning, for example. So we will get it up soon. Anyway, we want to thank 6IX for offering this opportunity to speak to you today. And thank you again. Keep track of us, CMB on TSXV.
Hey, good day, everybody. My name is Simon Diakovsky. I'm the president and CEO of Aztec Minerals Corp. It's my great pleasure today to introduce the company to you. Aztec Minerals is a mineral exploration company focused on 2 emerging discoveries. Our discoveries are made at our Tombstone project in southeastern Arizona that's focused on gold and silver. And then at our Cervantes project in eastern Sonora, Mexico, we are focused on a gold-copper porphyry discovery that we have made in that area. We're traded on the TSXV under the symbol AZT, also under the OTCQB board in the US on the symbol AZZTF. A bit of an overview of the company. We're focused on discovery, and we're fortunate to have made discoveries at each of our projects, not just one of them. And we're in pursuit of large gold, silver, polymetallic deposits. We're led by an experienced management and board. Many of our board members are well-known geologists who have made discoveries, operated mines, and sold companies. We're focused on mining-friendly jurisdictions. Arizona in the US, and Sonora in Mexico. We're currently drilling. We're drilling at our emerging gold-silver discovery at the Tombstone Silver District. This is our first pass of core drilling, and we expect to have results out over April, May, and June of 2023. This drilling will follow up on an initial 2 rounds of RC drilling, or reverse circulation, that we conducted over the years 2020 to 2022. Almost every single one of our RC holes hit impressive grids of oxide gold and silver, and we are hopeful for more good results as we drill with core this time around. We're also active on our project in Eastern Sonora called Cervantes. At Cervantes, we are wrapping up a $250,000 exploration program where we have taken hundreds of samples and are preparing for our next round of drilling. We've already got over 10,000 meters of drilling in that project, over 50 drill holes, and there we've delineated a gold oxide cap to what could be a much bigger and deeper gold copper porphyry system. So this is an exciting project that we anticipate drilling later on this year. In terms of market capitalization, we're an early stage exploration company with a market cap of just around $25 million. As of our last financials, we have $2.7 million in working capital in the company, and we have a good shareholder base. Almost 1 out of every 2 shares is either held by insiders or a close group. In terms of notable shareholders, our largest shareholder is Alamos Gold. Alamos Gold came into the story in a strategic financing last year on the back of some drill results at Cervantes. So they own just under 10% of our shares. We also have the support of Mirmican Capital and the EMA GARP Fund in terms of smaller institutions that have joined the name. We have approximately 95 million shares out, trading at about 25 cents Canadian as of the time of this recording. In terms of management directors, myself, I come from a capital markets background. David Heil, our VPX, has over almost 40 years of experience in the industry. He has played key roles in the discovery and development of 30 million ounces of gold and 25 million tons of copper. He's the former exploration manager of Peru Copper and spent many, many years in Peru and also in Nevada and now in Mexico. On our board, we have a Canadian Mining Hall of Famer, Mark Rebliati. He has been key in a number of porphyry discoveries, and he is the chairman of our technical committee. In terms of project locations, as I mentioned, we're in mining-friendly Arizona, about 40 miles away from the famous Taylor Hermosa discovery made back in 2015 and acquired by South 32 Mining back in 2018 for $1.8 billion. Cervantes, we're 160 kilometers east of Hermosillo, the regional mining center. We're 60 kilometers west of Alamos' Mulatos gold mine and 50 kilometers west of Agnico Eagle's La India gold mine, so we're in good company there. Why should investors be interested in Aztec? Well, Aztec has been busy over the last 3 years. Our market cap has grown from about $2 million 3 years ago to over $25 million today. We're actively exploring. We've been drilling at both of our projects consistently over the last 2 years. We have a lot of news flow, and we are working towards initial resource estimates at both of our projects. Both of these projects have a focus on oxide gold with additional exciting targets at depth. In the case of Tombstone, Arizona, we are building out potentially a gold oxide deposit with CRD or polymetallic underground potential at depth. And at Cervantes, similarly, we're building out an oxide gold deposit potentially near surface, and then deeper down, we are hunting for a larger gold copper porphyry system. So both of these projects have good upside, but are building on also a solid base of mineralization that we've already discovered. In sum, Aztec Minerals is a compelling investment opportunity for the following reasons. We're led by an experienced management and board. This is key in any exploration company, having good people that have done it before. We have an attractive valuation. We're not overvalued. We're trading at about 25 million market cap, and we've shown good growth in value over the last 3 years, both in the good markets and the bad markets. We have 2 prospective projects. We own 100% of the Cervantes project and 75% of the Tombstone Silver District in a joint venture with our partners. Both of our projects are now considered emerging discoveries. They're post-discovery and pre-resource. We expect to have resources out on these over the coming months. And we have exciting targets at both projects that we are just starting to scratch the surface of. So if there are any questions on the company, please feel free to shoot me an email, simon@aztecminerals.com, or give me a call, 604-619-7469. And thank you very much for watching this short video today. I appreciate your time.
G'day everybody, my name is Bruce Smith. I'm the CEO of Radius Gold. I'm here to give you an update on the company, a bit about myself. I'm an exploration geologist. I've been exploring globally for 30 years in Africa, in Asia, and the last 20 years focused on Latin America, and in particular Mexico. So Radius has multiple properties, and I would just like to run you through them, but particularly pay attention to the latest discovery that we've made, just press released a few days ago. So Radius has 6 properties, most of which are in joint venture with quality partners and being funded by them. We've got the Maricela property, which is available. It's an epithermal vein system in Sonora. Then we have Plata Verde. Plata Verde is a new silver project. We discovered it about 2 years ago. We've advanced it to drilling stage. Fresnillo, our partners, joint venture partners, have come in. They're getting ready to start drilling in the next 2 to 6 months, I would say. Then we have Amalia. Amalia, we've been drilling on and off for the last 4 years. We've got 67 drill holes in it, fully funded by our partner Pan American. They've earned in. It's a phenomenal discovery. We've had some amazing drill holes. It's a very big system. That project provides a basis for Radius's value. You can look at the sections, the 67 drill holes. I strongly believe that there'll be a mine developed there one day, and Radius will be part of it when it does. Then we have our joint ventures in Guatemala, fully funded by Volcanic. There's some great discoveries there, but today I'd like to concentrate on Tropico, which is our new property in Mexico, and give you an idea of what that's like, what we're going to do in the next 6 months. So we're looking at central Mexican silver and gold belt here, and right in the middle of it is our area of interest. Now, if we zoom into the Fresnillo district in Zacatecas, this is the Fresnillo city with the Fresnillo vein system around it. The Fresnillo vein system is probably the world's greatest epithermal vein system. It has been in constant production for 470 years. It's the oldest continuously operating mine in the world. It's huge. Now, not only has it been producing for a long time, it is still a major producer and still having new discoveries. Right now, Fresnillo Mining Company, which is working from the center on the Fresnillo mine, they are the world's biggest silver producer. And on the edge, they have this joint venture with Mag Silver called Juanicipio. That's a recent discovery. The resource on that, discovered in 2005, it's about 25 million tons global resource, but within that, on their most recent, it's 12 million tons at 427 silver and 2.1 gold plus 6% lead zinc combined. Now that's a phenomenal gross metal value, and they've put that into production just 2 years ago. So this area continues to deliver great discoveries. Now, the thing to note about these vein systems are hidden underneath the beam fields. They don't outcrop. Most of them, including Juanicipio, was found about 150, 200 meters below surface. A lot of people ask me how they did that, but 470 years of work. But across the valley here, you'll see this is beam fields. Flat lying, no outcrop, nothing, just red beam fields. On the other side of the valley, we found Tropico. Now, Tropico is a breccia pipe. It has a center on the top. It's 450 meters long by 250 meters wide, which is significant. And underneath Tropico is what we're interested in. So you'll see that we have a sinter, which is right at the land surface. That is the surface expression of silica. Usually they're barren, and a breccia pipe. So we're going to cut to a field video to get an understanding. But so you know, the Fresnillo vein systems are all found down here, about 150 to 300 meters below surface, and that's where we want to be. 20 kilometers in that direction is one of the world's biggest epithermal systems. That's the Fresnillo vein systems. They're silver dominant veins, and they're still producing today after 100 years. and they go down 1.5 kilometers. Right here with the sinter, that means we're at the paleo surface. There's a breccia pipe here that is at least 350 meters elongate, round pipe with sinter on top of it, with gold grades 0.3, 0.7, 0.2. You know, the boiling zone should be 150 meters under our feet. That is where the high grade is. It's a fantastic target, easy to drill. We're just out in the bean fields looking at sinters. Nobody's drilled here before. The guys here are bashing away at outcropping, intensely silicified silica breccia. Javier and Enrique, mestizos. So that's the story of Tropico. I hope you like it. I'm tremendously excited about it. It is in one of the great districts of the world. I fought for 2 years to get that signed. It was incredibly difficult to get it off the owners. It's never been explored before. We've just signed it. We're going to start with geophysics in the next month or two, drill permitting, and drilling should be 3 to 6 months out. That's where Radius's future lies at present, but we've got a bunch of other properties underneath to support us, funded by other people. Hope you like the presentation. Call me anytime you want any updates. Thank you very much. Have a good day.
China. The nation has long dominated many of the mineral resources critical to America's energy independence and security. And one mineral increasingly vital to our green energy future is graphite. Today, graphite mining and processing is absolutely dominated by China, leaving the U.S. vulnerable to strategic market manipulation. In fact, America has been entirely reliant on foreign graphite imports for decades. But now both industry and government are coming together to demand a sustainable domestic source of graphite that is essential to the rapidly growing clean energy economy. Welcome to Reflex Advanced Materials. Mine-to-market supply chain solutions. At Reflex, we own, source, process, and distribute graphite using a proprietary network of carefully selected best-of-breed partners. This enables scalable deliverability of custom processed graphite designed to meet our customers' unique specifications. We have already established relationships with over 25 key North American clients and have begun qualifying sales and introducing targeted marketing aimed at generating awareness, revenues, and investment, which positions us years ahead of our peers. And our plan is to increasingly introduce domestic production, extraction, and processing supply from our very own resource in Montana. Our Ruby Graphite project covers over 1,800 acres and is the only combined source of flake and vein graphite in the U.S. The Ruby Graphite asset was actively mined in the first half of the 20th century and includes extensive USGS mapping and assay data. Recent samples confirmed the government reports with lab results showing over 95% total carbon. We are eager to re-enter and reactivate this unique, historically proven deposit and are committed to using the most efficient, environmentally responsible development practices available to us in this infrastructure-rich, mining-friendly region. To learn more about Reflex Advanced Materials and our exciting opportunity, please visit reflexmaterials.com.
Lithium is actually 2% of the cell mass. It sounds like it's big because it's full lithium ion, but it really, like our battery should be called nickel graphite because it's mostly nickel and graphite.
With massive lithium-ion battery factories coming online across the nation, the demand for domestic, high-grade graphite is expected to skyrocket. Our strategic plan is focused on delivering high-grade graphite to our growing list of clients in the near term and ramping up to meet future demand from there. We are optimistic that Reflex Advanced Materials can play a major role, not only in America's clean energy independence, but also the world's clean energy future. Reflex Advanced Materials, mine-to-market supply chain solutions.
Hi, Paul. Great video. My name is Chris Hill. My role is VP Corporate Development at Reflex Advanced Materials. I'm speaking with the CEO, Paul Gorman from Toronto. Paul, can you talk a little bit about what shareholders can expect news flow-wise over the next couple months for Reflex?
Yeah, absolutely, Chris. Lots of good things happening with Reflex. I think the most important thing is, as the video explained, our property in Montana. It's in southwestern Montana, and it's a former producer. And a lot of people, especially investors, don't know that there's been no graphite production in the US at all since 1950. So we're looking at being one of the only continental plays with respect to graphite. And we've got a very aggressive drill program set up. We're applying for the permits right now. And we want to start to really formulate a plan with respect to a resource and figuring out how to get this material into the hands of the government and to some fairly large OEMs that are building gigafactories in the United States. So that's going to have ongoing press releases from now till probably September, October, announcing those drill results. And then we're going to have the other key component to our business, which is the metallurgical side, working with a very, very valued partner in Chicago known as American Energy Technologies. And we're partnering with them because they are the predominant group here in North America that understand carbon and understand how to get our material out of the ground and then get it into a form that can be used by industry and get it into the supply chain. So we've partnered with them, and they'll have quite a few news releases coming out with respect to the purity, the spheritization, and the graphitization of material going into different chemistries. So we really predominantly want to look at the battery business, energy storage, and things like that. That's where our graphite's going to be centrally located. So very exciting spring and summer to come for Reflex Advanced Materials.
That's great. Yeah, I agree. Big things happening for Reflex in 2023. That coupled with the billions of dollars that the U.S. federal government is putting in to establish the domestic battery supply chain in the States. Reflex is in a great position to be a huge key player in the domestic source graphite. So very exciting. Big things to come for Reflex.
Yeah, stay tuned. It's going to be good.
Absolutely. Have a good day, Paul.
Thanks, Chris. Have a good day.
Cheers.
Hello, and thank you for tuning in to Barcelli Minerals' presentation today. My name is Alicia Ford, and I'm the Business Development Manager at the Belcara Group. So you're probably going to hear from me twice today on both Barcelli and Silver Viper, but right now I'm going to focus on walking you through the highlights of Barcelli. So as I mentioned, Barcelli is part of the Belcara Group, which is comprised of technical and capital markets professionals in the mining industry with over 150 years of combined experience. Our model focuses on exploration, and given the structure of our group, we're able to draw on the knowledge of our 3 in-house senior geologists to identify opportunities to discover and develop quality exploration projects that maximize shareholder value. Given our team's network, we're continuously receiving and reviewing new projects for Barcelli and our other companies, Oryx and Silver Viper. The Belcara Group is the same team recognized for the discovery of Orco Silver's La Preciosa deposit in Durango, Mexico. The project began as a grassroots project by our team, which they then proved up the resource to over 270 million ounces and ultimately sold in a bidding war to Core Mining for over $350 million. So Barcelli Minerals Corp is a Canadian junior mineral exploration company whose sole asset is the advanced stage Barcelli Gold Project, a joint venture with Agnico Eagle Mines Limited. Ownership in the Barcelli project is 55% Agnico and 45% Barcelli for now. Agnico Eagle is the operator and can earn an additional 15% in the Barcelli project through the completion of a pre-feasibility study. There is no cash outlay requirement by Barcelli until a pre-feasibility study is completed. So the Barcelli project itself is situated in the mining region of Västerbottenland, northern Sweden, 600 kilometers north of Stockholm, and it covers 33,500 hectares in the Fennoscandian Shield. The Barcelli project is located on the western end of the Proterozoic Skellefteå Trend, a prolific volcanogenic massive sulfide deposits belt that intersects with the gold line in northern Sweden. Both polymetallic VMS deposits and intrusive hosted orogenic gold deposits are present in this region and on this property. Current and past producers in the region include Boliden, Christianberg, to name a few. The main gold-bearing system remains open in all directions. The structurally linked gold mineralized lodes occur mainly within a granodiorite host and, to a lesser extent, volcanic and sedimentary rocks. The AEM Central Shearson zones have a strike length approaching 3.6 kilometers, and that same northwest trending structural corridor does contain localized bodies with gold mineralization over an additional 4.4 kilometers. The drill-tested depth of the mineralized system approaches 1 kilometer and remains open. Gold is generally associated with arsenopyrite and low base metal content, but also occurs as a native metal. Since Agnico Eagle became the operator of the project in late 2015, a total of 162,691 meters of overburden penetration and core collection has been tabulated from a total of 433 drill holes. A significant portion of Agnico's drilling was focused on defining, verifying, and expanding the mineral resources within the AEM Central Shearson orogenic gold system. Much of the drill meterage was primarily focused on the discovery of massive sulfide mineralization that is hosted in the rocks of volcanic and sedimentary composition, along with post-mineral intrusive dikes and sills. The historic Nora VMS deposit within the claims is an example of this style of mineralization. In the interest of time, I won't be able to dive deep into the mineralization and drilling highlights, but I strongly suggest you check them out after the presentation at barcelliminerals.com in the project section. We also have excellent metallurgy on this project, so please go check that out. In our 2019 resource, indicated resources increased by 67% to 324,000 ounces, up from 193,000 ounces in 2018, and inferred resources increased by 46% to 2.08 million ounces of gold, up from 1.4 million ounces back in 2018. The main gold deposit remains open along strike and to depth. Considerable further drilling is necessary internal to the main zone, as well as peripheral expansion along strike and to depth. What was not included in the resource estimate was a discovery at Risberget target 3 kilometers southeast of the Shearson zone, the Nora polymetallic VMS deposit, a possible resource at newly discovered Baskatrask, and bonanza veins under the resource at AEM, so there is significant value in updating the resource. So what are our near-term plans? We will continue to explore the property with the highly skilled team that we have on site. Over the next 1 to 1.5 years, we would like to drill a minimum of 30,000 meters. The drill bit emphasis in the near term will be to grow the gold resource. We will work toward an additional 2.5 million ounces to create a near-term inventory of 3.5 million gold ounces. We work to maintain high standards of health, safety, and environment on site, and to continue exploration planning with the Sami people and maintaining positive relations with mining inspectorate and other governments, and to maintain all QA and QC protocols. Environmental surveys and water testing are ongoing. We will focus on adding continuity to the high-grade drill results of the AEM zone, additional drill testing at the recently discovered Baskatrask, and plans for drill testing the most compelling VMS targets. We will also continue with base of till drilling, geophysics, MEFA, and XRF sampling. Our long terms with Barcelay is to advance it to the point where a significant and reputable miner acquires the project with plans to develop it. By increasing the resource, we will provide value for shareholders and attractiveness to majors. So in summary, we have a high quality asset in a top mining jurisdiction. There is a lot of blue sky potential and strong management and shareholder support, with management and board owning approximately 25% and institutions holding about 50%. We have free carried interest, top tier metallurgy, and leverage to gold price, and this makes us a very attractive takeover candidate. It's a great time to get to know the story, and I encourage you to check out our website at barcelliminerals.com or to reach out to me directly at info@barcelliminerals.com. Thank you for watching.
Welcome to the 6 Leaders in Mining Conference Gold Outlook panel. I'm your moderator, Chantal Skeven, Managing Director of Capital Light Research. I want to thank you to our distinguished panel of guests, Andrew, Jeremy, Brian, and Dan, for joining me on this panel. To kick things off, I want to give the panelists a chance to introduce themselves and their companies. So over to you, Andrew.
Okay, thank you, Chantal, and welcome everybody. Just a quick overview of Sorama Resources. We're a gold-focused company operating in West Africa. We've got a large 3 million ounce project in Burkina Faso that's continuing to grow. We completed 20,000 meters of drilling on that last year, really focused on shallow, high-value material. It was quite a successful program, so we're very pleased with that. But importantly, the project is through critical size from a development point of view. and we've commenced work on a PEA, and we should have that out in the middle of the year. So it's a quick overview of the company, and I'll hand it on to the next person.
Thanks, Andrew. And next, Jeremy.
Thanks, Chantel. Hi, I'm Jeremy Link. I'm the president and CEO of Kincora Gold. I've been working on and off of Bay Street for the last 20 years, originally as a financial analyst at an investment bank. Then I worked at a hedge fund for a few years, and I spent the last decade or so working at various gold companies. Kincora is a gold-focused explorer working in the Abitibi region of Quebec. We've just wrapped up a 11,000-meter, 68-hole drill program, and are expecting to report some exciting drill results in the coming weeks, leading up to a mineral resource in the middle of this year.
Great. Thanks, Jeremy. And Brian.
Thanks very much, Chantel. My name is Brian Skanderbeg, and I'm the president and CEO of GFG Resources. We're a Timmins-focused exploration vehicle. We're based in Saskatoon, really driven to find the next great Timmins ore system. Also involved in a couple of boards on the executive and director side, and previously ran a company called Gold Resources, which was a Saskatchewan-based producer. So technical and been in the industry for about 20 years, really focused on GFG Resources at present. Thank you.
Thanks, Brian. And Dan.
Thanks, Chantel. I'm Dan Wilton. I'm the CEO of First Mining Gold. First Mining has a portfolio of projects, but really focused on advancing two major projects, the 5 million ounce Springpole gold deposit in northwestern Ontario, and the Duparquet project, which we consolidated last year, which is a 5 million ounce plus deposit in the Abitibi between Rouyn-Noranda and Timmins. So not too far from where Brian is, but we're moving these projects forward. Springpole in advanced stages of environmental assessment and going through the feasibility process, and Duparquet with a PEA that we've kicked off, hoping to have that out by the middle of the year, and both of those with district scale exploration potential around those existing deposits. So.
Great. Thanks, Dan. And again, thank you all for being here and for participating in the panel today. And, you know, to start things off, I just want to talk about the short term, you know, briefly. I think that, you know, the gold price has definitely had some ups and downs this year. And we started the year off with a gold price around, you know, 1843. We closed out the first quarter with it around 1980. And part of this increase was the bump from the banking crisis. And if we kind of look back to, you know, the last time back into 2008, when Bear Stearns failed, you know, we had a gold price initially go up by about 300. And then it went on to set a new high 4 years later for that cycle for, you know, of 1895. How long and deep do you think this banking crisis is going to go? Do you think they have it contained, for one? And how long and deep do you think it go? Do you think it's comparable to 2008? Does anybody want to jump in and start us off there?
Maybe I'll jump in there, Chantel. Having been through a few cycles in my life in gold mining, I can remember running mines when gold was 260. So it's come a long way since then. And I think that's really what people should keep in mind. That gold, when you look at the longer term trend, is generally positive. I don't think it's an investment really for, I mean, you can do short-term speculation, but I think if you look at the way gold's built over the last 3 years, there's been various, you know, global geopolitical events causing it to move around, be it up or down. I kind of see the banking crisis, which sitting in Australia, we perhaps have a little different perspective to people that are immersed in it in North America. I guess I kind of see it as more of a shorter term apparition, causing a short-term lift, but ultimately, you know, my view is with the debasement of the dollar, and it's really taking a long-term view on that, and also where the US dollar sits, because that really drives gold price ultimately. But if you look at the way it's tracked in the last couple of years, it's been building a base plus or minus $1,800. Doing a PEA at the moment, we've obviously had a good look at a few things, and gold price assumption's one of them. So I think it's formed a base there, but I think in the longer term, the trajectory is up, and these things are really noise on ultimately what's something that's building value over time.
Thank you, Andrew. And Dan, do you have something you'd like to add to that?
Well, I think Andrew started off with a really important point, which was kind of where the gold prices come from. And I think if you go back to the last cycle, which is something those of us who've been through a few cycles on the panel here will recall, gold really the last cycle kind of went from 250-ish, maybe 260 would have been the low in kind of late 90s, early 2000. To a peak of 1900. So when you think about the amplitude of that, the fact that the gold price in that period, went up, call it, 6 to 7 times, I think that's the kind of trough to peak that we can see in a gold price cyclical move over a longer period of time. I think we'd all look at this latest gold price move as, potentially, call it starting at sort of the last trough of 2016, 2015, 2016, gold price got down to 1,100. So is there any reason why we can't be 6 times that from trough to peak in this cycle? I think it's entirely possible. We've been talking about that for a few years. And it's when, 2019, when I took the job as CEO of First Mining Gold, the gold price was $1,300. We all used to say how great our life would be when the gold price was 1,800, and lo and behold, we're here and we're through that. And I think what's important, we'll get to this point later, but it still hasn't spurred investment to come down to mining development, right? And that's where, when you think about the longer term, this is important, kind of short term, and the banking crisis right now seems a bit contained, but you'll recall that it seemed contained in 2007 and early 2008. Like when Bear Stearns collapsed, we thought it was contained. And then Lehman collapsed 6 months later, and we're into what has been an unprecedented building of corporate and of government debt, which is the big difference where we are now. So I'm sure we'll cover those topics as we go forward. But no, I just think people should all keep in mind, the gold price going up 6 times is not unprecedented from a trough to a peak.
Yeah, that's a great way to look at it. And that's kind of how we look at it, is you get those really long rises in there, and we're definitely, seeing some of the base and then some momentum going towards that. So thank you. Brian or Jeremy, you guys want to jump in on this?
Yeah, I think Dan and Andrew had put some good comments. My personal belief is that we are contained at present in terms of the crisis, but there will be continuous fallout from this over the next 3, 6, 9 months. I think as much as anything, it brings eyes to the space, and in combination with everything else that's going on in the world, it's also so very positive for gold. I just think it continues to build a very strong base, and to me, us holding in there at 1950 and pushing 2000 again today is such a positive sentiment indicator for gold. So I really feel like the banking crisis as a holistically is probably going to be contained, because there's really no choice but to contain it. But it's all very incrementally positive for gold.
Yeah, great, thanks. Do you have any final comment you want to add on there, Jeremy?
Yeah, just that, my first big banking crisis was, the 2008 one. And, it's gold prices driven by kind of uncertainty as well, in addition to, the dollar value. And so right now with the banking crisis, I speak to, investors of all across the spectrum, and everyone is still deeply concerned about that banking crisis. Everyone wants to know, is it contained? Is it contained? And I think the real answer is we don't know if it's contained. Will be 3, 6, 9 months, a year. And, and another thing I learned over the years is that it's never too late to panic, which is why you should have gold in your portfolio.
There's definitely, and you never know when they're gonna, just kind of come up. So having it there already is such a positive for investors. Let's go back, and part of the banking crisis brings up, and Andrew touched on it, about the de-dollarization and not the de-dollarization, sorry, the debasement of currencies. And, central banks have printed, something like 11 trillion total in new money going in the Fed itself, as we call it, the central bank of central bankers, is kind of the, the leader of that, if you will. And, the debasement of the currency, how far do you think, central banks can go? Right now you have a Fed, and I saw a good article the other day that said, the Fed's in a tug of war against itself. It has both the crisis on one side and inflation on the other, and it's trying to do both right now. But, which one is going to give first? Do you think, we've already seen some softening in rates, and we're seeing money printing at the same time. Where could that, kind of lead to? And how do you see an end to it?
Well, I think I could just start with that in the sense that, if we looked at the government policy of the leading, take the G7s of the world, very few of these governments have shown any desire to return to fiscal normalcy or balancing budgets or anything of the sort. And we've been through some unprecedented times here in the last 5 years. But I just think the challenges that are driving these governments to continue debasement and issuing more currency will continue. I don't see any indications from governments in terms of their changing tactic here. And ultimately, this reflects all of us that choose to elect these individuals and elect the governments. There's not a large mandate, and there's nobody pushing the panic button to push governments to take on some fiscal restraint. So I think in that instance here, in Canada up here, we've just passed a budget that has a massive deficit to it. So I just don't see any of the main governments changing that tact moving forward. And yes, long term, that does just continue to drive the debasement of the major currencies of the world.
Well, and on top of that, Brian, the one thing that a lot of people don't focus on and haven't focused on, I feel like governments haven't focused on it, is the impact of higher interest rates on their debt servicing costs, right? And last year that wasn't such a big deal because, the rates were ticking up over the course of the year. There's a portion of that, obviously, that's termed out. But the actual costs of servicing debt, like when I was reading something that it's something like between 1.8 and $2 trillion incremental debt service costs at an interest rate of 5 or 4.5%, 5% versus where it would have been 18 months ago. That in and of itself is all money that's going to have to be printed. You're not raising taxes in the US going into an election year, like you're just not. So I think the hands are tied, and what we're seeing is everyone declaring victory, basically getting inflation back to kind of 5.5%. And I think, that's kind of the new normal. Because I don't think we've even really begun to start seeing the impact of wage push inflation, which is happening and is real in the economy.
Yeah, I think the bigger issue is that you've got all these governments, borrowing money. And in reality, I look at these budgets as well. These governments have no intention of ever paying back these debts. So how do they do that? Either they print their way out of it, or you have a sovereign debt crisis and everyone defaults on their currencies. And that's something I think we're going to see unfold over the next 10 years.
I think if you look at it on a global basis, I know you guys being based in North America, focus on what's nearby, and obviously the US drives most of the global market anyway. But if you look at it on a global basis, no country really can afford to have a strong currency. It's pretty much a race to the bottom with all countries. None of them have got the political will to stop printing money. You have headline inflation numbers, then you have actual inflation, and then you have, I think there's a third layer there of what money actually buys you, and I think everyone's a different thing. And I think over time, and I think to pick up on Jeremy's point, governments will try and inflate away their debt. But in doing that, the challenge, I think, for investors and for people is how do you preserve your wealth? And really the only way to preserve your wealth is to have it in hard assets, and whether that's property, land, gold, or whatever. So that's my view. If I look back over my career, and how I guess I've built my own personal wealth, I wouldn't say fortune, but wealth at best is really through those things over time. And I think if you're, when I meet with family offices that are running substantial amounts of money, really their biggest challenge is not to get a 20% return. Their challenge is to preserve the wealth of that particular family. And I think that's a challenge for everybody, whether you're a smaller retail type person, or whether you're somebody managing a family office, or whether you're somebody who's managing a pension fund. That really is a challenge, and it's where you put the money to preserve that value, let alone get a return on it. So I think that's probably one of the biggest challenges going forward, because governments do not have the political will to stop spending, and they can't. And what stops that, I don't know, whether it's a sovereign debt crisis, but that'll be global, or whether it's just you have a period of hyperinflation and that just reduces the debt to a serviceable level for the government, but the damage done in that process will be monumental.
Yeah, well, one day the music will just stop, right? And
Yeah.
we'll have the crisis, right? That's what always seems to happen, right? Everyone plays these games, participates in these markets, and then all of a sudden the music stops, right? And there's only so many chairs left. And I think if the sovereign debt crisis, there ends up being no chairs left.
And so if they, one of the things kind of picking up on the sovereign debt, and, a lot of debt is denominated in US dollars. And of course, the value of the dollar has just been rising overall. I know it's come down some. But, and a lot of countries are now, we have a question about, there's a lot of countries that are now wanting out of the dollar. And, to Andrew's point, they want hard assets too. Central banks are buying gold. I mean, and that's a longer term trend that we're starting to see record amounts last year. And, de-dollarization, what impact, I guess it might be self-evident in the question, but what impact is that going to have on the gold price as countries, along with individuals, are looking for, that safer place? And is this a trend, what could change that trend? Maybe we should ask it in that way, so it's not quite self-evident it's going to be positive. What could change that trend, or where do you see, is there anything that could? Maybe I'll ask it that way.
Well, in some ways, you're already seeing that. I mean, an alternative to the US dollar in terms of how currency baskets work and what is the reserve currency of the world. So, in some ways, a shift to a pool of currencies that the world can agree upon to trade the goods we all make is an alternative to it. But I think this whole thesis of de-dollarization and central bank purchases is such a bullish indicator for where we sit today. And we're all gold bugs, many of us, if we're being on this panel. But if I talk to somebody that's not in the gold space and they ask me, why are you interested in gold? Or what's the thesis of it today? Why do I believe in it? The first thing I start with is like, look, the central banks of the world that ultimately control the financials of, the entirety of us are shifting to gold. And that is such a huge indicator and bullish piece for gold to those that are maybe generalists, or those that don't follow the gold space. And to me, that thesis continues. The de-dollarization theme will continue to move along very strongly. And this is just all setting up a very strong floor in gold, and likely continues to push us up and break out to all-time highs. And here we sit at 2000 and Dan's laying the case out for a much stronger price. And I think those all fundamentals are very strongly are there. So yeah, that would be my take on the de-dollarization. As it continues, there are alternatives, but I think they will continue to push gold.
Yeah, I mean, go ahead, Andrew.
I was just going to say, on that theme, where we operate in Africa, we're seeing by necessity countries move away from using US dollar for trade. Particularly if they're wanting to trade with states that are maybe blacklisted, but are still politically acceptable to them. So you're seeing that driven in that direction. You're seeing it obviously with China, Russia, India as well. But I think with the US dollar, though, I think one of the reasons why I don't think you'll see that go away anytime soon is if you want to get in and out of a currency in a huge amount, US dollar is pretty much the only one you can do it in. If you need to park your money for 48 hours, and it's a very large amount. But I think the central bank buying is very intriguing. And it does say something, exactly what it says longer term. I'm not sure, except for it's good for gold. And I think it does point to the fact that countries don't like being dependent on the US dollar and with all the strings that come with it, whether it's you have to transact all your money through the US or get captured in US laws or whatever. So I think there's a lot of different kind of angles to look at that. And I think if you look at over history, currencies come and go, but gold's always there. I was in a museum in Istanbul one time and I saw a clay tablet, and on that it was basically a receipt for payment in gold, and that was about 5,000 years old. So nothing's changed. Burkina Faso is using that now. So
clay tablets, Andrew?
Yeah. Istanbul Museum of Natural History. Go there.
Oh, that's amazing. That's amazing. No, I think the bigger thing that investors should be looking at is, who are the central banks that are increasing their holdings of gold? And it's still a pretty opaque market to a degree. The World Gold Council, shout out to them, I think does a very good job of tracking that and moving that forward. But it's a lot of countries that you would not necessarily expect to be, large purchasers of gold. And if they are doing it, you can bet that discussion is happening in the far larger and more sophisticated corners of the central banking world as well. So, I think it speaks to where we're going in a kind of a multipolar world, in a sense that we haven't really had one since the mid to late 80s. And I think there's going to be a currency alternative that springs out of it. And, for all that we look at the gold market, that's fine. The value of the global energy market, I think, in terms of, daily transactions is really the thing that's going to require a second set of settlement and a second mechanism of settlement. And I think that's, where we're really going with Russia and China and, a number of other countries that are looking for some of those alternatives. So where does it end? Well, I think it ends with gold playing the one of those roles that it always has played, which is kind of that impartial arbiter and store of value. And it's one of the things that is kind of at this point big enough that you shouldn't be able to be, aggressively manipulated. And it's something that I think, everyone sort of has varying degrees of, but certainly degree of confidence in. So I think it plays a really important role in transitioning to whatever that, the alternative is to the US dollar.
Yeah. And
when I think of, go ahead, Chantal.
No, go ahead. I'll let you jump in there.
No, Dan, when I think of central bank buying, it always comes to my mind is China and Russia are the big ones that I see in headlines, which I think is driven by geopolitical issues. Who are the other big buyers of gold that you read about?
It's Turkey and it's Uzbekistan, and it's again, I go back to the World Gold Council. They have a reasonable list of it all, but it is it's surprisingly widespread.
Yeah, so I just see China continues to sell off its US dollar holdings and debt instruments, right? And they're on a 10-year low for their holdings, and I think Russia. We saw what happened with the conflict in Ukraine, right? They had all these assets seized and whatnot, and so they move over to gold because it's something that the U.S. government or anybody else can't really take away from them. And so I really think that increasing geopolitical tensions and the theater of war erupts outside of Ukraine, that's going to be really constructive for the price of gold. Unfortunate for the rest of us, but I think that's a huge driver of this central bank buying, is that they want to have things, hard assets, just like we think all investors should own some hard assets.
Yeah, I mean, I agree. I think central banks buy gold for much of the same reason investors do, is have hard assets and have something that's not the counterparty risk of somebody else. You're not really relying on what the Fed does or what anybody, kind of does. And so, the longer term trend of de-dollarization, I agree. I think it's going to be with the gold, and it's going to, really be a driver of gold through kind of the longer term. And central banks are just one part of the demand. Talking about, longer term trends. You also have, physical gold for investors, and in China and India, those countries, as their, urbanization rates come up, as they, kind of move up in the economic world, have been huge demanders for gold. Is that, for consumers and for jewelry. And, we're really seeing urbanization trends are going to just keep increasing in Africa and in India and in Southeast Asia. What do you think the impact of, how is that also going to impact the gold price?
Well, I don't know. When I was, a kid, I wouldn't know anything about the gold standard, but my mother knew about the gold standard, and she was raised in that. And so I didn't really understand that gold was money until I was much, much older in life. But when you look at areas like India and China, gold has been money continuously. It has never stopped, and that's why it's such a prized gift to give during various festivals and whatnot. So I think as those economies continue to grow, their GDP grows, they become more and more important players on the world economic front, that you will see increased gold purchases there, which will be good for the price of gold.
Yeah, I mean, there's demand from there. You also have, investment demand in physical. People want to hold the, coins and silver. And, let's turn to the long-term supply, where we have this increased demand, but, supply is a bit of is kind of on a halt. And, there's some that, that the pandemic had, negative impact on supply, as, some places actually had to close. Now they're building back up. But the medium-term outlook already called for kind of a decline in supply and in mine output. And, one of the concepts that we've heard, or, you read about, is peak gold. Like, basically, that we've mined the most. I don't know, just, the part is the definition that I'm going with that is that we've mined the most gold we can ever mine in 1 year. So we've kind of reached the year, and it's just going to either stay the same or go down. And some people believe that we've already reached that. Do any thoughts on that?
I think I'll kind of jump in here. I'm probably the oldest here. So I think one of the things I've noticed kind of over the journey, and it's not just me, it's a fact, is that gold production will continue, but the thing that changes is grade and size of projects. And I can't remember the exact figures, but if you look at the average reserve grade, even over the last 10 years, it's probably halved or more. And then if you look at the throughput rates you have to achieve to get a reasonable kind of output, quite substantial. And then you throw in the cost of energy and everything else that goes with that, it kind of creates an interesting dynamic. So I think, gold will still get produced in reasonable quantities, but what's going to happen is grades are just going to drop off. I sit here and say we've got a good grade deposit and it's 2 grams. And, when I started out working, if I said I had a good grade deposit and it was 2 grams, everyone would look at me like I was strange. So it's kind of interesting how the dynamic changes over time. So I think gold output will continue, but the grade will drop, and the impact of that is costs go up. So there's more than one dynamic at play here. It's kind of interesting, the lower cost gold producers on the ASX are all in Africa, which is kind of because the industry is not as mature there perhaps as elsewhere in more developed markets. So that's kind of interesting in itself. So you're weighing off political risk versus geological risk. I think gold will keep to get produced, but there's going to be margin squeeze unless gold price goes up. If people don't see the value, gold production, then no money goes into exploration. And obviously, I think we all work at that end in this panel. And you look at the scarcity of capital to look for new mines, and then you look at the time lag from when you find something to bring it into production. So there's a lot of things aligning on the supply side that would, potentially drive gold price up, and then you overlay obviously geopolitical factors and the things we're just talking about with currency, the challenge to try and preserve wealth and things like that. So I'll stop there though, so I don't want to hog the puck, to use a Canadian term.
Well, then I think absolutely. Thanks. I think you've absolutely hit the nail on the head. If you go back to the early 2000s, your average all-in sustaining costs for the gold industry probably would have been $200 an ounce. Today it's probably $1,500 average, or at least certainly moving toward that. So I think that's part of the reason why you see escalation in the gold price, is there needs to be an incentive price to continue to produce. And you see that in times where the gold price rolls over. But the single biggest thing is that other than, a couple of brief spurts, there has been very little money put toward exploration and development in the gold industry really since 2011. And a lot of the projects, even the projects that are getting built now, many of those are still exploration successes from the tail end of the peak of the last cycle. And it takes that amount of time to go from discovery through delineation, through engineering and permitting, to get to a point where you can build a mine. And that time frame has probably doubled industry-wide over the course of the last 10 years. And it's much as, a number of governments are making moves to try and shorten that, it's not getting any shorter. And I can tell you that because we're moving a big project through an environmental assessment process right now. And we're about 5 years into it. And the average time to go through in Canada for a big project like that's, 7 from when you start. And when you start, you have to have had a number of years of obviously development work as well. So I think where we're going is this period where, there's a few mines, a handful of mines, particularly in Canada, kind of being built now. But the cupboard is very bare for development projects beyond that, or certainly for economic resources. And I think Andrew hit a really important point. You look at where you have the geological endowment in a lot of parts of the world are places where you are trading geologic risk or grade for some degree of political risk. So, I think it sets up a really interesting prospect of a real squeeze. Now, existing mines can always drop grade, increase production by throwing capital and generally lowering your grade. They have been doing that will continue to be done for particularly the big world-class deposits. But, we need to find and develop more deposits. And there's just, there is a real visibility because these things don't get discovered and turned into production very quickly.
Yeah, did you want to jump in, Jeremy?
No, I didn't. I have nothing more to add really that's significant to Andrew's points. I think they caught everything. One thing I would say is over my career on the corporate side, which is more than a decade now, I've seen reserve grades essentially drop every year, almost by 10%, it seems like. I think the peak we had was in 2017 of 1.47 grams per ton. I know last year was 1.3 was the average reserve grade, which is crazy because I think it's Winston Churchill who said, I don't trust any statistic unless I've manipulated it myself. I mean, the average doesn't really exist, right? You have deposits that are higher grade than that and ones that are much lower grade than that. And so I think we'll continue to see, grade drop, and we'll just see mines, to Dan's point, throw more capital, increase throughput, and produce more gold. So I think we don't have peak gold scenario, we have peak grade, and that's been going on, and that was many years ago, and that's going to continue to decline.
Yeah, our estimates is that, and I agree, it's hard to just average it because it's so varying by mine and by project and by,
Oh, it's only a family with 2.4 kids.
Yeah, yes, that's right. That's right. But it's declined. The process grades have declined, 35% over the last 20 years, basically. And most of that, in the last few years. And, I want to touch on 2 points. So let's start with, the long mine processing and that it's doubled. And the estimate is, it's gone from kind of 7 years to get mine permitting to 15 years to 20 years, just depending on where you are. And, there are government initiatives. We've had both US and Canada and other governments come in and say, and some of this is related to kind of what they're calling the critical minerals. Everybody's realizing that whatever we use is coming from mining, and we need more mines in order to get things out. And, and they've put in vowed to put in these initiatives in recent months to streamline the process of mining. Have they actually put in ones that are helping? And what do they need to do? I mean, if you could, I'm sit down with governments and say, this is what we need from you. Is there something specific that you would say to kind of get that process moving?
Well, in Canada, I would suggest that all provinces adopt the same attitude to mining that Quebec has at all levels of government, whether it's taxation, permitting, and just generally trying to attract that business and promote mining, across the province. It's the best place to work on the planet.
Yeah, I think the this challenge of time lag from discovery through to production is very difficult to skate back towards where we were. There's just more and more stakeholders, and Dan, somebody like First Mining, where you're trying to advance some large projects, the list of stakeholders is so long and growing that it's difficult to see how this is going to improve moving forward. I think governments will do their piece. Whether it's permitting at the exploration side or permitting at the development side or permitting at a production side, they'll all do their piece to try. But the crux of this is there's more and more stakeholders all the time, and the degree to which they all want to be consulted and compensated or involved in the process, I have difficulty to see how this is going to materially improve to where we maybe were 5, 10, 15 years ago. And, when you compound that to your question on peak gold, it's really just, it's so difficult to bring incremental new production into the pipeline, whether it's capital, whether it's deposit, whether it's stakeholders. These are just all very, very material hurdles for us to overcome. So I think the government and the regulatory side is a very difficult one to push back, to actually make fundamental improvements because of the complexity of the stakeholder arrangements. Dan, you're probably more of an expert on this.
Well, we're right in the middle of it, and I will say, the province of Ontario, and particularly the mines minister, has convened an industry council. The council's now met a couple of times, and they're asking exactly this question: what do we need to change in order for things to move forward? They've introduced some interesting policy that I think that will certainly help. But one of the biggest issues of the time lag is just access and availability to capital for, exploration and development stage companies to do the work to define the resource in the first place. Because you can't really start mine permitting until you have an economic deposit. And realistically, you get a good sense of that from a PEA stage maybe, but you at least need to be at a resource and a reasonably well-defined resource. And getting from that stage to a feasibility stage is, often tens of millions of dollars of infill drilling. And we haven't had the environment where development companies or, later stage explorers have had really the access to capital to do that at the pace with which you'd need to do that if you were going to shorten that time frame from discovery to permitting. So the other thing, and this is just sort of from our experience and my experience moving through this, is we need to find a way to better align the interests of, in Canada particularly, align the interests of Indigenous communities in the industry. Because I think there are all kinds of great successes where you've seen communities that have really benefited from resource development in their traditional territory. But it's at the outset, it's tough to get everyone to buy into that when no one really knows at the outset, what's in it for them. So I think we need to find ways to align interests so that everyone's walking in this path together. Now, there's always going to be some conflict there, and I think that's something that it really, to a large extent, is government's role to mediate and to make some of those judgments sort of on the trade-offs of society. But I think there's just such absolute win-win to come from the industry moving forward. But again, I don't think that does anything to shorten timeframes, because I think there's just a certain amount of baseline work that you need to have done, and then a certain amount of engineering work that you need to have done before you can answer the questions as to what the impact of a project is going to be.
I think just picking up on Dan's point there, being capital constrained is probably the single biggest issue for us, and it has been for a long, long time. We obviously operate in a different jurisdiction to other panelists here. And I don't expect an answer, but I'll be intrigued to see what the difference between Quebec and British Columbia is from a government point of view, and why it can't be mimicked elsewhere. But I guess my observation as well from the cheap seats is the number of rent seekers that are in the process is massive, and there's a whole industry built around this stuff that doesn't really care what the timeframes are. But I won't go into that. But in Africa, I guess accessing capital is obviously challenging at the moment. But if you look at companies that are building there, from discovery to first production, I think you'll find the timelines a lot straighter. Yeah. Even in countries like Burkina Faso, that has its own idiosyncrasies, put it that way. But the time frame to get from discovery through to first production is generally fairly good. If you're in a country that has a modern mining code, it's transparent and lays out the process, you tick the boxes and you move forward. And the reason for that is that the local communities typically want to see development progress for jobs and just getting some money into their economy. The government typically always needs revenue. All governments need revenue, but it's very direct drive in African countries. So there's a lot of things there that I guess the will of the people that remove a lot of barriers to move projects forward in a fairly rapid manner relative to what you're seeing in more developed economies. I find it quite intriguing when I look at the rhetoric coming out of the US on supporting future-facing minerals, and then the first thing they do is knock I think the biggest copper deposit on the head from a development point of view. And I just kind of try and develop a project in Europe. It's just like the list goes on and on and on. So it is pretty interesting how that whole dynamic plays out. And I do obviously have colleagues that have mines or have built mines in Canada, and it's been quite interesting watching them get tied in knots doing what Dan's doing at the moment. Mm-hmm. Not saying Australia's any better, by the way, but I'm focused on Africa. So
I think what's really interesting is that alignment of interest, right? You have governments that are really aligned, their interests are aligned with advancing the economic development, and that filters through down into local communities. And I think you have certain provincial governments that are far more aligned. I think the federal government is making a great push on critical minerals, and that's great. We'll see what they can be doing to help streamline some of the development things here too. But you have to have that alignment.
I think
Yeah.
there's one other point. We talked a bit about capital and timeline of permitting, and I probably lean a little more on the front end of exploration than some of my peers here. And the reality is that what we try to do on the front end is just exceedingly difficult in finding new and relevant systems. And GFG Focus is an area of Timmins where we're looking under deep cover, and many global exploration companies and some of the biggest companies in the world, are looking deep. And we're all looking for a new deposit that can drive into this new production stream, and so we could move past peak gold. But the reality is that what we're doing is very difficult. Technology has advanced incrementally, and that drives into a probability feedback that is lower. So if we invested $10 million or $20 million or $1 billion, we'll just end up finding less, and we'll find fewer new systems. And those systems that we do find will be proportionally more difficult to bring through production. So when we look at this peak gold concept, it has negative or challenges throughout the whole system, right from exploration through to development, through to capital, through to expansion. And that's where I think I fundamentally go back and think about peak gold is, yeah, we are definitely at peak gold for 6 or 8 different reasons throughout the life cycle of the various mines here.
Yeah, I mean, capital is one of the issues that keeps coming to kind of the forefront in the access to capital. And we had comments from Pierre Lassonde, who has been in the mining industry, as you guys all know, from lots and lots of years. And he said, the mining at the end of 2016 and begin to 2017, right after this kind of uplay came, he said, it's the worst that he'd ever seen in his lifetime. And then you had COVID on top of that, kind of affect delays and difficulties in financing. Do you think that it has turned around from then? And I'm going to tie in the next question with that is, one of the, things is that we have a lot of generalist investors kind of went into other sectors, and we're starting to see them come back. There's a more interest and there's more momentum in the sector. But what needs to be done to kind of bring in more generalist investors to, kind of increase that capital that can be accessed?
I think part of this is margin. I think Andrew and Dan, we've talked a bit around margin compression, and despite the fact we might sit at $2,000 gold today, our margins have declined globally over the last 12, 18 months. So generalists like to see, to me, capital return, but also the metal's got to perform well, and your margins have to be moving in a direction they like. So that's probably the piece that I think is maybe giving some pause or some question to the generalist moving into the space in a more material way. Is this margin compression challenge that we faced coming out of COVID, and what's that done to the AISCs of many of the producers out there? Because the generalists don't typically move into the bottom end of this cycle. They move into the top end first and then all down through. And I do think that that still has a ways to come through yet. So that's where I would point is, margin, clarity and margin expansion as opposed to margin compression.
That's a really good point. One of the, and I'm going to tie in one question we got from the audience back into this, to, if anybody else wants to jump in, is, what about M&A activity in 2023? And that was the question. So I don't know if you want to add anything on there.
Well,
where do you see that going? Because it can help, companies. But of course, you got to kind of get past that first leg first before it really goes. So.
I think, Chantel, it all fits together, right? Like we've not had a really robust M&A market, with the exception of a couple of spurts here and there. Mm-hmm. Really, again, since 2011, 2012, particularly with respect to development projects. You've had, a few one-offs where you've seen activity. You're starting to see that pick up, and you're starting to see it pick up now as a logical consequence of there being fewer and fewer development projects around, and those that are around have been, continued to be advanced in sort of tough access to capital markets. So I think, investors, particularly call it institutional investors, have been looking for more and more consolidation, particularly in that mid-tier space where they see a bunch of assets and probably more overhead than you would need from a bunch of mid-tier producers who should be able to scale, spreading and concentrate the quality of their concentrate on the quality of their assets, concentrate on the quality of the people, which is another thing that's really getting to be a scarcity in this industry. And it's something that, for all that we have a crisis of exploration finds and a crisis of development projects, we have a real crisis of people in this industry. And that's where it's going to start becoming, very, very challenging. And that's just because this has been a difficult industry to attract people to for 20 years, 25 years. Mm-hmm. But all of that plays into an M&A narrative. And I think the other thing that will start to bring your generalist investors down into exploration and development again is when some of these projects start getting bought, or some of these, you'll have companies that will merge or combine, and a lot of that capital then can get redirected down into the industry. The other thing that's going to change the kind of capital access for the industry is just cash flow at higher gold prices. And it's one of the things that I think a lot of people haven't focused on, is that most of the companies that we talk to, larger producers, ran their capital budgets this year at either $1,500 or $1,600 gold, right? Gold was $1,600 and on a downtrend when they did their capital budgeting in November. So you've got the larger gold companies in the world generating, between $300 and $500 incremental margin on every ounce, and that's free cash flow, right? That is the leverage of the commodity price movements in this industry. Is every dollar that it goes up, generally speaking, is free cash flow to your bottom line. And some of that money will start making its way down to the development sector and the exploration sector. And we're starting to see it more than we have in the last few years, because there is a scarcity of good projects, advanced projects to move forward. And so I think once that money starts coming back down and solving some of the capital issues that Brian and Andrew were talking about, I think that really opens the door up for, your less specialist investors to come in and say, okay, well, the same thing we've been telling people for years, there is a scarcity of projects, there is a scarcity of talent. And at some point, those are going to be, more highly valued than they are.
I think, just to kind of pick up on Dan's point, one of the kind of observations I make is that companies tend to, like broadly speaking, when the market's hot, there's a lot more M&A. So companies are kind of doing M&A maybe when they shouldn't and not doing it when they should. But I think what I see in the part of the world where we operate, there's kind of M&A always ticking along, but it's very accretive. So companies they're not doing it on a whim. They're doing it for a specific reason. It's not growth for growth's sake or replacing ounces for replacing ounces' sake. Most of the deals we're seeing in our part of the world are value driven. And I think, last cycle, going back 10 years, there was maybe a lot of M&A that wasn't accretive. And my chairman was actually pretty heavily involved with Redback, and I think the Kinross Redback deal probably marked the top of the last cycle, where they paid $8 billion for 2 mines. So it's kind of an interesting dynamic that's going on at the moment, just from an M&A side of things. But what we have seen in Australia in the last couple of weeks is Albemarle's bid for Liontown, which is a lithium play. And it's completely changed the mood of the market here in the last week or so. So we've just done a small raise, and we kind of saw that come through. The momentum money is not there. But what we did see through that course is that the Liontown bid emerged, and everyone's mood completely changed in the market. And I think if that deal goes through, even if it doesn't, I think money is going to recycle out into gold if gold takes a bit of a lift. Because the in the Australian dollar gold point of view, the margin's quite substantial. You know, it's probably close to $3,000 an ounce in Australian now. So miners, I don't think anyone's really clicked to that. Even though the costs have gone up, at the current gold price, the margins are still substantial.
Yeah. And, you know, I think that is one thing, is that you kind of got to get that momentum going in there to kind of get those generalists and the margins to draw them back in. So thank you very much for the comments on that. So I want to end with, we did have a question that asked, what do you think the gold price is going to be at the end of 2023? So, you know, if you want to answer that, put a number out there, go for it. But I would like to give you, it's like 2 minutes, just to, what would you like investors to remember about your company? And we'll go in reverse order this time. So Dan, do you want to start us off on that?
Sure. Well, and I think we'd ask investors to remember that as a starting point, you know, we're a company with 12+ million ounces of gold between 3 main projects, but lots of exposure to an increasing gold price. And our Springpole project is one of the most advanced projects in Canada that's not already permitted. So, you know, maybe not the next one up, but certainly very close in the queue there. So, you know, I think those development projects, when they're trading at values like they are now, represent amazing leverage to the gold price because of the strategic elements that we've been talking about. Because, you know, they are should be able to attract a bit more capital sooner, and don't necessarily rely on the exploration success. But that said, you know, there's a lot of my colleagues on the call here that have projects that will have outstanding exploration success, which, you know, can have multiples returns as well. So, yeah, and my gold price call for the end of the year, I would say $23.50.
Okay. Brian, what are your last comments?
Yeah, I'll start with gold price. You know, I was thinking 22, 23, so I'm actually not that indifferent to Dan. I think it's peak, you know, all-time gold high. I do think as we move through this pause cycle and potentially reversion in peak interest rates, that will translate to peak gold through H2 of this year. You know, with respect to GFG, I think we're one of the companies working at the front end of this cycle that has people, that has land, that has results, and that can drive the next wave of discovery. So, you know, we're backed by amongst some of the smartest investors in the world. The Lundin family is one of our largest shareholders, and we have Alamos also as a very large shareholder, I think a sophisticated mid-tier. And these really translate to a small cap company that's found ore bodies before, that is well financed. And we're working in a jurisdiction like Timmins, where, you know, technically we've looked at this belt and said, we think it can yield a lot more. And we think we can yield it a lot more within infrastructure and proximity to us. So I think having a look at GFG, we would emphasize our people, our results, and our jurisdiction that we work in.
Great. Thank you, Brian. And Jeremy, what are your final comments?
Sure. And I'll try to tie it into some of the themes that we talked about today. So Kiboko is working 55 kilometers north of Val-d'Or, which is the most productive gold producing region in Canada. It's also the hottest space for M&A in the gold space over the last decade. I think, $15 billion worth of transactions. So it's a really good address. Our project is not grassroots. There's about 140,000 meters of historical drilling. We just wrapped up a drill program of about 11,000 meters over 68 holes in an area that has about 80,000 meters of historical drilling. We've had some issues with the lab. That bottleneck has now been cleared. So we'll start reporting assay results, and we're looking here for a higher grade open pit project. And we expect to report a pit constrained mineral resource around the middle of this year at grades of multiple grams per ton, which I think many would consider to be a high grade. That ties into my views on gold price. I'm not a gold bug. I'm rather agnostic on gold price because at Kiboko, we're looking for a high grade project, and all other projects we worked in the past have been high grade as well. And but in the spirit of having a gold price target for the end of the year and being a big fan of the Price is Right, the highest I heard was 23.50, so I'm going to go with 23.51.
I love it.
Great. And Andrew, do you want to give us some comments on your company and the gold price?
Yeah, okay. I'll quickly touch on Surama. I think the kind of key takeaways for Surama is, we've got a very large and strategic land holding in Burkina Faso. We've already got a significant project that underpins the value of the company. It's already through a size to which we can push it into development, and we're just doing a PEA on that, which will look at a multi-stage development. So we'll start off with a kind of a mid-sized project. It won't sterilise any of the longer-term exploration upside, which we think is significant. The central deposit in our main project there is really part of a major gold district. We have Endeavour to the west. With Bantu, if you have those two projects together, you're around 5 million ounces, and most of that's within 150 metres of surface. So that's the reason why you go to places where we work. So I think, it's a late stage exploration play, but we're looking at now how to move it up the equation, optimising on an EV per share basis rather than a project NAV, because we obviously have to equity fund quite a lot of this. So it's a slightly different approach. So I think that's the takeaway from the company. It's already a pretty solid resource. It's through the size to build. We're now looking at framing that opportunity up for the market so it can get its head around it. And with respect to the gold price, I love Jeremy's approach. It's fraught with peril, but I think I'll probably take the lower end and say end of the year, probably 2,200, 2,250 would be my price.
Great. So it has some room to go, and maybe we could look at that as the quarter average, and then it'll go up. You have that peak that goes a little higher, but we'll wait and see what happens on that. So again, I really want to thank you all for joining me on the panel today and for your comments. I think investors get some really great insights, and and also to thank you to the 6 leaders for hosting our panel today. And we really appreciate it and hope that everyone has a great afternoon.